Good evening and welcome to this session of the live learning classes conducted by the Board of Studies Academic of the Institute of Chartered Accountants of India. The last class, we made a beginning on incorporation of company and matters incidental thereto, and we had good interaction. Let me also greet all of you out there who have, sort of logged on and greeted. So nice. The number of people is pretty large, so I'm not calling out by name, but I can see those of you who are here and others who possibly not put a greeting there, but still listening to what I'm saying. I greet you all and wish you all well. And yesterday was Guru Purnima. So I'm sure you are aware that yesterday was Guru Purnima. So today I just take this opportunity to remember my Guru, a great teacher of company law, Professor K.S. Anantharaman. In fact, this concept of the two pillars of company law, the protection of the investor and protection of creditor, is directly taken from his book, The Lectures on Company Law, by Professor K.S. Anantharaman, my guru. Maybe at a later date, I would show a photograph, and I take this opportunity to pay homage to my guru in remembrance of Guru Purnima Day. I have a huge question from Mr. Manav Agarwal. I don't know why he is putting such a long query there. Let's see, in the last class you told that OPC is not allowed to hold securities. I thought about it and I feel that if OPC is allowed to hold securities, I suppose first starts an OPC and then keeping himself and OPC as members and start. So then success like a huge company, direct client is greater. Exactly. See, the idea of not having OPC as a investment is to absolutely see, since finally you are saying, can you provide your opinion? I concur with your opinion, Mr. Manav Agarwal, and that is why they have said. I also made the point that abroad there is no such restriction, but in India there is a restriction because we have a serious issue called money laundering. So you have not actually touched upon money laundering. That's also a hidden problem. See, this whole conglomerate thing, this whole one person controlling so much, the idea is to launder money. Sometimes criminal money or political corruption, etc., could be laundered through legitimate businesses and all that. So, as you rightly point out, there is a need for that, and good. So, quite a long analysis, but very correctly said. Why private and public company cannot convert to Section 8 company? See, you can always. When did we ever say that? All that we said was, let us go back. Maybe it is my mistake. I have not communicated it correctly. Rushita Sharma, let me come to the point. See, OPC cannot convert itself into a. See, OPC can be converted into a private or public company other than Section 8 company. OPC. Okay. Similarly, private other than company registered under Section 8 can convert into an OPC. Let us get one thing. OPC is basically a private company. Got it? OPC is basically a private company. Now, when you are converting an OPC, you can convert it into private or public, whatever. But that private or public company should not be registered under Section 8 of the Act. Reverse. A private company can become OPC. Public company cannot become OPC. But in either case, even a private company which is licensed under Section 8 cannot become an OPC. But there is no prohibition on private and public company converting into Section 8 company. See, all you need to do is you have to make an application to the central government. That's all. See, you are already an incorporated private company or a public company. You want to become a Section 8 company. Private or public can become Section 8. If I have told that, maybe miscommunicated. No. Maybe this concept got miscommunicated. We are talking about OPC. OPC cannot become Section 8, whether private or public. Private company can become OPC, but if it's a Section 8 company, it cannot convert into OPC. So Section 8 OPC link is the issue there. Don't worry. Otherwise, private and public can become Section 8. Are you clear, madam? In case you are now clarified, kindly confirm that you are clarified. that would help me to, feel happy that I have communicated. Got it? So the procedure is, if you are already an existing private or public, first you need to amend your articles. That, you can't declare dividend, your amount should be applied, all that you have to do. And then you can apply for a license. And once the regional director is happy, they will issue a license. Central government will issue a license. Okay. There is no such prohibition. If I have told like that, I am now correcting myself. I am now clarifying it. Got it? So kindly do confirm your understanding on the query pad. I'll be much happy. Not only for Rushita ji here, all of you, when you raise a question and I have answered it, if you think the answer is satisfactory or you are happy with the answer, etc., whatever, just to put a confirm there. In case you are not happy with the answer and you still got a query, put that also. We'll see where it goes. And then at some stage, we'll agree to disagree or beg to differ and proceed on. Chalo. Now, coming to the point, effect of registration, section 9. Okay. Now, from the date of incorporation mentioned in the certificate of incorporation, very, very important. So the company comes into existence as on the date mentioned in the certificate of incorporation. So once the certificate of incorporation is issued from that date, from the date mentioned in the certificate of incorporation, such subscribers to the memorandum and all other persons as may from time to time become members of the company shall be a body corporate by the name contained in the memorandum. So by an act of legal magic, by a wave of the wand, by the ministry, a new person comes into existence. They become incorporated into a body corporate or shall be a body corporate. Body corporate means what? Body corporate includes Indian company also. So don't get worried. Body corporate. So Indian company incorporated in India is a body corporate. Company incorporated in India under this Companies Act or earlier Companies Act is a body corporate. Body corporate includes company incorporated outside India also. Okay. So there will be a body corporate, which means what? Two things are very important. They can hold, the body corporate or company can hold assets in its own name. Also, it can sue and be sued in its own name. Thirdly, it will have perpetual succession. Okay. So, perpetual succession, power to acquire, hold and dispose of property, both mobile and immobile, tangible and immobile, in its own name. To contract and sue and be sued by the said name instead of. Okay, so these are the qualities. Now, thank you, Mr. Rushita, for confirming. Mayur Gupta wants to know, can partnership be converted into Section 8? Sir, first of all, you have to convert the partnership into a company. Samajh gaya na? You understand na? First, you have to convert the partnership into a company. For that, there is a procedure under Chapter 22 or 21, 22, I think. 21 or 22, I don't know. You have to convert the chapter. You have to convert the partnership into a company. At the time of conversion, you want it to be a Section 8 company, go ahead, apply for a license and get it converted. But partnership straight away cannot become Section 8 company. First, a partnership has to become a company. In that process, you can make it a Section 8 company if you want. Yeah, why not? You can. But remember, you are asking question, but why? Why would a partnership want to become Section 8 company? If a partnership firm comes to me and says, we want to become Section 8 company, I say, hey, why, Baba, why? You form a fresh Section 8 company, 2 minutes, I'll get it for you. Why convert this? Conversion is a pain. Why convert? You keep this firm or dissolve that firm. I will form a fresh company for you, Section 8 ka. See, are you able to understand? So it's a good question. I'm not questioning your question. But why? Kyo? There is no need. That firm. Unless, they are saying, no, we want. Then, chalo, give me 2.5 lakhs, 3 lakhs, I'll do it for you. Because you have to first convert. Conversion itself is a long-winded process. Then also you're saying Section 8, that is another process. So it'll take some time, it will take 6 months. We'll do it for you, don't worry. If you want to, see, such people want to give fees to people like me, I'm happy. Okay, but normally I wouldn't encourage a firm, that too a commercial firm, engaged in commercial activities. Why it will want to become Section 8? Section 8 is a not-for-profit. Not-for-profit, you want to do not-for-profit activity, better you form a company separately as Section 8. I will form it for you and do it. Think about it. Just don't get otherwise that I am countering what you are saying or telling. Sometimes, becoming a chartered accountant actually is easy. You have to pass the exam, that's all. But being a chartered accountant, it's a you have to think a lot before, because live clients will be sitting in front of you and they need to be given proper advice. This is not examination where you can ask any number of questions and write. Theoretically, we cannot approach. You have to give practical solution then and there, here and now. You have to give practical solution to the client. Why I am telling this now? Institute exam also, people who have common sense will be rewarded faster. So they will understand, okay, this is what it is. In real life, this is what I will have. So I should equip myself for that. That should be the goal. No problem. Good show, Mayurji. Thank you very much. Yeah, this is a good point. Tusharji makes a very valid point. He says, Tushar Sharma says, partnership firm can be member in Section 8 company. Yes, I can. Yeah, normally, partnership cannot be a member of any other company because partnership is not a body corporate. It cannot hold and dispose of property, including shares, in its own name. In its own name. Okay. Therefore, it has to be held in the name of the partner. So, partnership directly cannot be a member entered in the register of members, except firm. You might ask me why this exception is given to Section 8 company. Tushar, you have given that statement, partnership firm can be member of Section 8 company. Why? See, this unfortunate question now, why? It's a dangerous question. Why, if a person keeps on asking in his life or in her life, they will become highly intelligent. Because why will answer many questions. What anybody can tell. Anybody who can read a book and mug up can tell what. Why? If Tushar can give why also, I'll be happy. Otherwise, I will tell. But let's wait for Tushar to give why. Of course, when we come to members and share capital, or I think when we come to allotment of securities and all, we will talk about this. Partnership can be a member of a Section 8 company. But it's a good point he's making. It is one of the exceptions of Section 8. Why? Conversion. See, conversion, I don't want to touch upon it here. Conversion is an option, when we will choose. It's a little complicated. It is a little complicated. It is complicated. It takes more time because there is an existing firm with all a legacy. Overnight, I'm going to convert it into a company which is under a separate process. Okay. Section 22, Chapter 22 conversion. It's a slightly different process. Almost the same as incorporation, except that normally incorporation subscribers. Here, we are going to convert. And on conversion, the partners will become the shareholders of the company straight away. And there will be a change in the identity, but not in the entirety. Okay, slightly complicated, costly also. Okay, because a lot of issues there, I cannot tell you what it is. It will be complicated. Don't worry, but not impossible. I have myself done. See, in fact, I specialize in conversions. Not conversion, but conversions. That is, I specialize in conversion of partnership firms into companies. Because I find most of non-urban sector in India, in my state of Tamil Nadu, a lot of, upcountry cities, we find many people still have firms and proprietaries. And they want corporatists. So I give a lot of, I advise someone corporatists. But see, again, I will not recommend conversion as a panacea for all evils. There are some situations where I would prefer to form a company, meaning incorporate a company and take over the business, or even take over the assets and liabilities also. See, if you go under 47, Section 47 of the Income Tax Act, 47, you check up whatever it is there. You'll find if you comply with those onerous conditions, you will avoid capital gain also. Okay, on transfer of undertaking. You can do that. Okay, but then that's what I'm saying. If you ask me now, if you catch my collar and ask me, which is better, sir? Partnership is better or incorporation? Then I will say, I don't know. Let the client come, we'll discuss. I'll be asking 5 or 6 crucial questions. The answers will decide whether I will recommend this or that. That's what I'm saying. See, I know I'm doing lecturing for you, but instead of talking about the core subject and instead of content, I'm giving you thing, but think about it. Straight away. See, suppose a medical student is learning a lot of anatomy, lot of diagnostic skills. He can't take it. He has to, the patient comes and then only all your knowledge gets focused on that single patient. And then you give him a cure. You cure him or you help him to get what he wants. For that only we are doing all this learning. Not just company law, Baba, income tax, company law, GST, Ind AS, completely. They are all tools. So there is no one, you can't have that one single answer to all your questions. It will be a complicated thing. Judgment is needed. That is why, overnight, we don't make you chartered accountant. For 3 years, we want you to be under a fool like me. Somebody like me, you will have to work. Why? Because then only many things cannot be taught like this in the classroom by teaching a subject. You will see me doing. That way you will learn. I saw my father doing. For 3 years, 2 years, I was with my father, doing nothing. Just observing what he is doing, how he is handling. In this situation, how he is. That is how we learn. No, straight away, if anything can be learned, then everybody will be wrong. Anyway, this is my view. I may be wrong. Sorry, but that is my 57 years. My humble view is that experience is more important than book learning. Book learning, see, I am a rank holder. Come on, yeah, book learning. Just mug up, vomit, I got rank. No, going beyond that 30 years of practice. That is where I learned really. Every day I learned. Today morning, one client calls me, GST problem. We are discussing interstate movement of goods. What will happen? Oh. So we learn. Every day we learn. Okay. Think like that, you will become brilliant chartered accountants. But if the minute you start thinking narrowly, everything in the book is the only right thing, outside of the book there is no knowledge, then you are in trouble. Anyway, so coming back to your good questions. Conversion is easy to do or incorporation. Incorporation is easy. Conversion is difficult. But in some cases, conversion is preferable. When the partnership firm has a legacy of 60 years, 50 years, in those cases, conversion will be preferred. Intellectual property rights are there. All sorts of brand, etc. Then better to go for conversion. That's the point. Anyway, partnership firm is person. Yeah, it is a person, but you see, I'll tell you why. You got an answer which I'm not able to say you are wrong or right. It's correct. Partnership firm is a person, but not a body corporate. Got it? It's not a body corporate, it's a person. Under the Income Tax Act, it is a person. It is a person. I do agree with you. Point is, it cannot become shareholder here. But Section 8, why? Reason, many Section 8 companies are basically chambers of commerce. Many chambers of commerce will become Section 8 companies. They will come as Section 8 companies. The Bombay Stock Exchange is a Section 8 company. Remember, in those days, who were the brokers? They were firms. Okay. Similarly, Chamber of Commerce, some firms can become member. Therefore, Section 8 company alone give an exemption to admit firms as members. Okay. Other than that, no. Only for Section 8, especially, chambers of commerce, stock exchanges, these are all there. The firm can become member. That too, in those days, from some firms, even today we have a client who's 60 years old. That firm is going to complete 60 years. 60 years. And we have been their auditors for 40 years now. Okay. And that it's a firm. It's still a firm. Can you imagine? Now, if this firm, I want to form a company and take over, the new company will be just 1 year old. Whereas it is a 60-year-old firm with legacy. So we will convert it. That is where conversion becomes sensible. So this is the decision we take. Okay. Because there is no return given on the investment price, we are allowed to be a member in Section 8 company. Agreed. Also to promote charitable purposes. Exactly. That way your answer is correct, Manav. Especially see chambers of commerce and stock exchanges, many firms will be already members there. Therefore, they said when Section 8, Section 25 came, firm can continue to be a member. Only Section 8 company can have firm. Correct. In the company law, it is mentioned that any person can become partner in Section 8 company. Correct. That way you are going by the bookish approach. You are right. That is, any person can become partner in, become partner. Shareholder, member. Yeah, agreed. But firm is a person, no doubt about it. Okay. Good job. Okay, Keshav, I will go a little slow. The company comes into existence from the date mentioned in the certificate of incorporation. Even if it is wrongly mentioned, the legal fiction of the company comes into existence from that date. For example, in this Jubilee Cotton Mills versus Lewis, the date was mentioned one day before the actual date of incorporation. Wrongly, it was mentioned one day before they had appointed somebody on that day. It was said it is valid because though the signatories actually signed it on a particular day, though the certificate was actually signed on a particular day, later, the fact that the certificate of incorporation was dated earlier means it is valid. The company comes into existence from the date mentioned in the certificate of incorporation. Am I going slow? Is it okay? Is this speed okay? Keshavji, you can just control my speed a little. If you are happy, I'll be happy. Chalo, memorandum is defined. Memorandum means the memorandum of association of a company, originally framed or as altered from time to time. So, originally framed means as signatory signed. Thereafter, there will be amendment, right? So, together that document is called memorandum. It is a very important document. It is the base document. And along with the articles of association, it is regarded as the constitution of the company. Constitute means to create. So these two documents constitute the company. So they are the constitution. India has a constitution. When the constitution was signed, that day, the sovereign democratic republic called India came into existence, which is my birthday, 26/1. Okay, so that is when the Republic Day, when we had our own constitution and we started, right? So India as a sovereign democratic republic was constituted. Similarly, the company is constituted by the memorandum and articles. Memorandum is the charter that brings the company into existence. See, in a democratic country like India or any democratic country, there will be an authority which registers the companies. They may be called by different names, but it will be, even in some cases, the corporation of a city will have the power to register companies. That such cases are there. Depends. But whatever it is, a democratic body, there is a legislature which creates a law. Under that law, there is an authority. Under that authority, you have to go apply and get yourself registered. You become a company, registered company. Right? But in those days, before democracy, we had monarchy, especially the great monarchy called England. Okay, the United Kingdom of England, Scotland, Wales. Okay, together became the United Kingdom. And that United Kingdom had one single queen, recently now a king. Before that, King George VI was there. Then King George V, who ruled us. Then VI also ruled us. And during the period of King George VI, we got independence. So the point I'm trying to make is, in those days, there was no incorporation. It was called charter. A company was formed and given permission to operate by the king or the queen. They were called chartered companies. Okay, the English East India Company was a chartered company. But still, though today we don't have charter, instead we have the memorandum and articles of association. Whatever the date is, answering Mr. Keshav, whatever date is mentioned in the incorporation will be the valid date. If it is later, then anything done before that date will be invalid. It will not be, okay, instead of saying invalid, I will say it will not be binding on the company. Shall I put it that way? It will be a pre-incorporation. It will be like a pre-incorporation contract, which is not binding on the company. Got it? So that is the correct answer I'll give you. If the date, say a date is mentioned in the certificate of incorporation, before that date, a contract is entered into by the company, purporting to be by the company. It is not binding on the company. I'm going to use the word very, very carefully, Keshav, and slowly. That I'm not saying the contract is void. I am saying the contract is not binding on the company. Whoever has entered into that contract on behalf of the company are now answerable to the other party. Okay, this is the correct answer I will give you. See, the memorandum and articles need to be registered. Why? Because they contain the objects for which the company is formed and therefore identifies the possible scope of its operations beyond which its actions cannot go. So, we register the memorandum and articles so that any person, shareholder, creditor, all those who deal with the company will know what its powers are and what activities it can engage in and how the money invested or lent by them would be utilized. Suppose you want to deposit money with Dubakur Limited, right? What is unless you see the memorandum, you will not know what are the objects of Dubakur Limited. Whether Dubakur can do all these things as per the memorandum. So, how will you know? Only if you can see the document. How will you see the document? Because it is now registered, it becomes a public document under Section 399 of the Companies Act 2013. It's a public document, meaning every person has the right to go to the MCA website. Maybe sometimes they may charge a fee, sometimes it is free. I'm not exactly aware of that. Every person is presumed to have the knowledge of the conditions contained in the memorandum. Why or how? Because it has become a public document. Whenever you want, you can go and see. Since it is readily available to you as a public, you cannot say, or I cannot say, I am not aware. So you are presumed to have the knowledge. This is called the doctrine of constructive notice and is applicable to all documents filed with the registrar of companies or uploaded on the MCA online portal. Note it, my dear friends, not only the memorandum and articles, every document which is filed with the registrar or uploaded on the MCA online portal becomes a public document capable of being viewed. Now, you have to go to the MCA website, create a logon ID. They have some IDs and all. You have to create all that and then log in. Then you have to go and search for the company, then documents and all. In some cases, they charge you for it. For downloading and all, they charge you. You go through the website. If you want to do some inspection, you have to go to the website and go to the access and you will download. Okay, you can. Memorandum are subject to, or memorandum and articles subject to Companies Act. But they are not subject to. They are the subject of the Companies Act. They are not subject to the Companies Act. The Companies Act, see, this Companies Act is only talking about it. You are able to understand. Okay, they are subject. The memorandum and articles are prepared in accordance with the sections of the Companies Act. Got it? The format is given in the Companies Act only. Okay, so yes, they are subject to Companies Act 2013, CA Act, Companies Act 2013. They are accessible by public, yes. See, my dear friend Keshav, you are saying NPO. Don't say NPO. NPO means that it can be a trust. It can be a society. It can be a Section 8 company. If it is a Section 8 company, it will have a memorandum and articles. If it is a trust, it will have a trust deed. If it is a society, it will have bylaws. You got it? Bylaws and similar under the State Societies Registration Act. Okay. So you are using the word NPO. Be careful. NPO, 3 types are. So if it is a Section 25 company, it will have memorandum and articles of association. Yeah, even Section 8 will have, definitely. You can. Balance sheet and P&L filed by public companies can be seen. Private company, you can see balance sheet, but not P&L. Okay, if the private company wants, it can avoid filing it. Okay. Public, it can say, it will file it, but it can say not to be shown. Because the profitability and all will be. But public company, stark naked, they are standing. You and I can go and check. Now you can download any public company, listed company, you can go to their website and get it. Or SEBI ka website you will get, or NSE ka website you will get. Straight away you will get balance sheet. Listed companies, in fact, I am as an investor in the market, I go by fundamental analysis, which means I need at least 5 to 10 years of historical data. That I collect only from the net. And then I do my analysis for valuation. So now we come to the memorandum. Memorandum has 6 clauses. Let us first see what we are going to do is, we are going to see what are the clauses of the memorandum, then some points about the clauses, then how to alter the clauses. So we are going to see the clauses. Clause means not like Santa Claus. This clause means section. C-L-A-U-S-E, clause means section. It's a Latin term again, which means section. So clause means section, like section. Okay. In the memorandum, we call it clause, whereas in the Companies Act, we call it section. I'm sorry, in between, I got a little excited and I started talking very fast. My apologies to not only Keshav, but to all of you. I'm very sorry, because already we are in an electronic mode. So if I speak very fast, I can understand. It will be very difficult for you to understand. I'm so sorry. Can we simply say that MOA contains object? Yes. MOA contains the objects, but it also has other things. So, yes, one of the main information contained in the memorandum is the object. So, you can simply say that MCA contains the objects for which they are from. Absolutely. But in addition to that, it contains other clauses also. Not only this, but if I see, for example, can this company enter into a contract in connection with the concerned product or concerned industry? To answer that question, the first place I will look is object clause in the memorandum. If the objects are permitting, I can go ahead. If the objects are not permitting, I will simply say, my dear friend, your objects are not there. Kindly amend your object. That is why alteration of each one of these clauses, how, when, where, etc. becomes important. So thank you, Keshav. Thank you for saying that. And doctrine of constructive notice is basically a rule of presumption, meaning since any document connected with the company and filed with the ROC is available for public inspection, since it is available, it is presumed that everybody who wants to enter into a contract or relationship with the company has read the memorandum and articles and is aware of the content in the correct way. They have read and understood. This is a presumption. Presumption means it may not be true, but it is taken as true. Deeming. So constructive means deemed. Notice means knowledge. Constructive notice means deemed knowledge. Even if the knowledge is not there, it is presumed that the knowledge is there. So the person cannot say, I am not aware. Are you able to understand? The person cannot say, I am not aware. For example, Dubakur Limited cannot accept deposits. There is no clause in the memorandum permitting the company for accepting deposits. They go around advertising for deposits. No, you want to deposit money. Without reading the memorandum, you give money. Later on, you cannot say, no, I was not aware that you cannot, because you should have known before giving like that. So, you are deemed to have read the memorandum and articles of association. What happens is, later on we will see the doctrine of ultravires. What does the doctrine of ultravires say? We are going to see that. And I'm sure some of you would have read it in your foundation or BCom also. Doctrine of ultravires. Okay. Let us see whether you know. What is the doctrine of ultravires? We'll see that shortly, but quickly. Doctrine of ultravires. any contract entered into by a company which is beyond the scope of its memorandum and articles, especially the object clause, is void ab initio. You'll see the consequence of that. But let's get one thing clear. I want you to go through the memorandum with me. I am going to take you through the memorandum clause by clause. Okay. First clause is called name clause. The name of the company with the last word limited in the case of public limited company, or the last words private limited in the case of a private limited. So this is called name. So that is one single line. It is the name of the company is Dubakur Limited. So in the case of one-person company, which is basically a private company, one-person company is basically a private company, the name should have OPC Private Limited as suffix, meaning Dubakur OPC Private Limited. If it is a one-person company. Okay. Now, next clause, domicile or situation clause. Friends, this clause does not give the postal address of the company. No, that will come in a different form. Later on, when you come to registered office, I will tell you. Within 30 days, you have to locate the registered office and inform the registrar through a separate form. That is the postal address. In this clause, you will only have the state in which the registered office of the company is to be situated. In a country like India, where we have a kind of, we are federal, but to an extent, state also has a lot of, so since we are federal, states also have certain law-making powers, and states also have control. So, whether though technically, theoretically, the Constitution permits any Indian to travel anywhere in India and carry on business or employment anywhere in India. It's a fundamental right. Nobody can take it away from you. Having said that, once you choose one place as your home, that place in the state in which it is situated, you become domiciled in that state. You cannot be having domicile in two states, my dear friends. Your domicile can be in only one state. For example, my domicile is the state of, one of the states, whichever state. Whatever it is, your domicile, state of Punjab and Haryana. I don't know, Punjab is a state, I think, and Haryana, or state of Rajasthan, state of Gujarat, state of West Bengal, state of Andhra Pradesh, state of Telangana, whichever state, you are a domicile. Similarly, company also is a domicile of a particular state. Why? Because for all registration and other purposes, the domicile would be very relevant. For example, if you are going to say IGST, how will you decide? From where you are billing, that is your domicile. From there, in any other state, it will become IGST. In that state, it will become local. So you need to have a home state. That will be mentioned here. The state in which the registered office of the company is to be situated. I will take all the questions. You keep pushing the questions. Once I complete one level, I will take the questions. The objects for which the company is proposed to be incorporated, these are known as main objects. In addition to that, matters which are necessary for furtherance of the main objects. Main objects, maximum you can have 5, 3 to 5. If you have too many main objects, they will not incorporate. They will ask you to restrict it. And you can't have too general also. For example, you cannot put a main object that says to do anything that the shareholders feel desirable from time to time. That 100% that will be rejected. They will not incorporate the company. They will ask you to amend up. You have to have specific. See, you can have a little bit of variety, but you cannot totally be away. For example, if you are in automobile, you can talk about manufacturing of automobile components, automobile ancillary, automobile also. No problem. You can talk about trading, you can talk about manufacturing, export, import, everything you can do. But that should be around automobile. In that object, you cannot have a second object that says running hotels. No. Okay. if you want to have a conglomerate business, then better you go for subsidiary. The subsidiary will have a object which is running hotel. You will be the holding company. Holding company will be a conglomerate company, which would be a holding, which would be only holding shares in these subsidiaries like that. You can't. Or if you decided I am a conglomerate, then you have to specifically go to the ministry, say, boss, I've got 10 businesses. All are run under one name. These are all these 10 businesses. I want to put them in the main objects. They will permit you. But you have to justify. Okay. Only then they will allow you to. Then there is something called liability clause. You already know that the liability of the members of a company is limited. Now, such limitation of liability, the liability of the members of the company may be limited or it may be unlimited. If it is limited, it may be limited by shares. That is the amount unpaid, if any, on the shares held by them. Or it can be limited by guarantee, the amount up to which each member undertakes to contribute to the assets of the company in the event of winding up, to the cost, charges, and for adjustment of the rights of the contributors. That is, at the time of winding up, if there is a deficit, the assets are not sufficient to meet the liabilities. To the extent of the guarantee given at the time of incorporation, each member will have to pay towards the liabilities, costs, charges, etc. Okay. So, but that liability is limited to the amount, if any, guaranteed, up to which each member undertakes to contribute. So, at the time of incorporation, I am signing. I guarantee up to 50,000 rupees. So, in case the company goes into winding up, if assets are sold, all liabilities are paid, no problem. But if assets are sold, there is a deficit, then I have to pay 50,000. Or else, suppose the deficit is less, then proportionately all of us will pay. You understand? If suppose all the guarantees, if you total, we get 2 crore, whereas the deficit is only 50 lakhs, then each will share 1/4, 1/4, 1/4. Am I correct? Each of us will share 1/4 because proportion. Okay, we have guaranteed 2 crore, whereas this comes to only 50 lakhs. So 1/4 only needed. So each of us will contribute whatever amount we said, 1/4 of that. So that will amount to 50 lakhs, which we will give to the company pay. Got it? So this is how in limited by guarantee. See, in some cases, when a company is limited by guarantee and it does not have shares. See, there could be company limited by guarantee having share capital, or company limited by guarantee not having share capital. Then each member will not have share. He will have only interest in that company. He may have interest to an extent, so much is the interest like. Okay. 5th class is called capital class. This will mention the authorized capital, the amount of share capital which the company is to be registered. This is the maximum number of shares that the company can issue. Okay. And the number of shares which the subscribers agree to subscribe. And each should take at least 1 share. The number of shares each subscriber to the memorandum intends to take will be indicated opposite this name. But this will come in, actually this part will come in the association clause. Okay, but in the capital clause, we will mention the authorized capital of the company or nominal capital of the company shall be rupees 2 crores divided into 20 lakh shares of rupees 10 each. That's all. If you have equity. If you have preference, you will say the share capital of the company shall be 20 lakh equity shares of rupees 10 each, amounting to rupees 2 crore, and 1 lakh preference shares of rupees 100 each. Like that, you can tell. No problem. Any provision in the memorandum or articles in the case of a company limited by guarantee and not having share capital shall not give any person a right to participate in the divisible profits of the company otherwise than as a member. Meaning, only member can participate in the divisible profits. This will be usually done, I told you, where there is no share capital, each will have interest. So 20% interest, 10% interest. Only members can participate. That's all. See, this is to prevent giving share to people who are not members because there is no share capital. There is no share capital. So you cannot. Whoever is signatory to the memorandum, whoever is a member, only they can participate in the divisible profits of the company. Non-members are not entitled to dividend, etc. in the profits, divisible profits of a company limited by guarantee, not having share capital. Last clause, subscription clause. See, technically this is not a clause. This is the contractual part. In fact, the wordings will be, we the several persons whose names and signatures are given below are desirous of incorporating ourselves as a company and have set our names and signatures together with the shares agreed to be taken by us. So it's a contractual part. Okay. So according to section 7(1)(a), there shall be filed with the registrar within whose jurisdiction the registered office of a company is proposed to be situated. Now you got the state now. So which registrar will register the company will depend on the state where you're going to be registered. So you want to be in Bengaluru, then ROC Bangalore, Karnataka. If you want to be in Maharashtra, what is the problem with Maharashtra? Anybody? See, if it's a regular class, immediately people will answer. Anybody can tell what, if you want to be registered in Maharashtra, which ROC will register you? I'll tell you what the problem. There are two ROCs in Maharashtra. One is for Mumbai, the city of Mumbai, and the other sits in Pune for the rest of Maharashtra. In the same way, we have in Tamil Nadu, one guy who sits in Chennai, and one guy who sits in Coimbatore, or a lady who sits in, I don't know, some person who sits in Coimbatore. So there are two states in India have two ROCs. Two states in India have two ROCs. Just for your knowledge, and maybe it will be useful to you. Two states in India have two ROCs, right? So one in Maharashtra, two in Maharashtra, two in Tamil Nadu. Because maximum industrial activity happens in Mumbai. Chennai also became a hub of industrial activity thanks to automobile industry and software industry and all. So then slowly it moved to Bangalore. Bangalore also got enough traffic. And Bangalore also became a major hub of IT industry, as you know. So what I'm doing now, I'm taking all your questions and I will answer that in one shot because I want to get the flow. So there shall be filed with the registrar within whose jurisdiction the registered office of the company is proposed to be situated, the memorandum and articles duly signed by all the subscribers to the memorandum. Okay, so it has to be signed. Then it will be scanned and uploaded. Once the subscribers sign the memorandum in the prescribed manner and the ROC issues a certificate of incorporation, there is a binding contract between each member and the company, and the members inter se amongst themselves. So memorandum is signed, articles is signed, put together, forms, everything put, filed, uploaded, MCA goes through it, issue certificate of incorporation, company comes into existence. Contractual relationship. There is a contractual relationship between the company and every member and between the members inter se. Inter se means amongst themselves. So it is as if there is a contract between every member and the company and every member and every other member. So there are 700 members, you do the permutation combination. But the point is they are mutually bound. But for what? For obeying the articles. The articles of association gives the bylaws, the rules and regulations for the conduct of the company. That binds them. They are bound by it. They have to obey it. Okay. So this is the memorandum clauses. See, this is the subscription clause. In the case of a OPC, one-person company, two additional clauses are there. That is, the seventh clause. 6 clauses are there. The 7th clause only applicable for OPC, which says, I, whose name and address is given below, am desirous of forming a company in pursuance of this memorandum of association and agree to take all. So in the case of a one-person company, this is the subscription clause. Got it? And agree to take all the shares in the company, in the capital of the company. So then in the normal case also, you will give names and addresses of subscribers, signature. In the case of OPC, only one fellow will sign. That's it. In addition to that, for a OPC, there is an 8th clause. What is that? The nominee should be named. So they should very clearly say, Shri, Srimati, so-and-so, son of, daughter of, resident of, aged, shall be the nominee in the event of the death of the sole member. These two 7th and 8th clauses are peculiarly applicable only to OPC and not to any other company. We will come to the formats. There have been a lot of queries. Let me take those queries and give you my answers. Okay, I got it. Thank you. Will the company be sued for misleading investors? Yeah, later on, we will go to, when we come to prospectus, we will talk about it. But again, I will tell you, I gave an example that was a little risky because accepting deposits gets covered under prospectus also. See, anything which is not mentioned in the memorandum, company cannot do. If it does, the contract entered into is void and not binding on the company. Why? I will explain to you when you come to Doctrine of Ultra Vires. At that time, I will clearly explain to you. Beyond the powers, what happens? Okay. What if there is no clause restricting the company from accepting deposits? In that case, see, an absence of a clause is not a permission. Please, no. Absence, in this case, if the company has to do something, that should be specifically, clearly mentioned in the memorandum. You cannot presume that since it is not mentioned, I am able to do. No, sir. Don't go that route. It cannot work. Got it? Then there are so many clauses are not there. Then can I do all that? You got my point? Very clearly, you should tell company can accept deposits. That's why drafting memorandum and articles should be very careful. Comprehensively, you have to draft it. In fact, what I did was early stages, I created a template. All comprehensive template. Nowadays, the template is used once in, say, 10 years when there's an amendment or something, we revisit the template and we keep changing it. But by and large, the template is acceptable. For partnership firm, I have a proper template, which I use. For companies, I have a template, which I use. For trust also, I have a Pakka template, that Income Tax Act approved template, which is also valid for Trust Act. We have. That way, we won't reinvent the wheel every time. We just use it. And wherever necessary, we make changes. So that you don't take in, so there it will be clearly accepting deposits, taking loans, everything will be clearly mentioned in the articles. Anything done beyond companies act in the or ultra wires, correct. The company cannot go. Beautiful. So all of you have. Okay. Tushar is jumping to doctrine of indoor management. I will come to that. Members of company cannot go beyond any act by company beyond. It's void ab initio. Beautifully. All of you are, you are all giving answers for that. Beautiful. I'm able to see that your knowledge of company law is tremendous. It is presumed that the person enter into the company already. Okay. Companies are multiple of. Yeah, you can have. You see, you have. I'll come to the point. When we come to registered office, I'll dwell more upon it. But right now, one office shall be the registered officer. One office should be the registered officer. What does it say here? The state in which the registered office of the company is situated. That has to be only one AKA. After that, you can have a number of branches, corporate office, administrative office, blah, blah, blah. But only one registered office for the purpose of Companies Act. Got it? See, again, I am very surprised. And students, you see something and then you react. Remember, go to the memorandum and see what is the registered office. For example, in Mumbai, there may be an office of ABC Limited. But that office may be well-known office. But you will be very surprised if you see the memorandum, the registered office may be in Gujarat, Vadodara. That is the registered office. So the domicile is state of Gujarat, not Maharashtra. For your information. Okay. Domicile situation, same. Domicile means not necessarily birth of company. Where is the company? Hey, boss, Vaishali Bindal, I will answer. Domicile means the state in which the registered office of the company is to be situated. That's all. Wherever your registered office is situated is your domicile. For example, somebody might have been born in the state of Gujarat or in the state of Bihar, but they might settle down in Mumbai, Maharashtra. Which is their domicile now? Birthplace is Bihar. But today, ration card, Aadhaar card, PAN card, passport, everything Mumbai address. So you are a domicile of Bihar or Maharashtra. Now you are clear, na? Same way company also, you should ask, where is your registered office? Gujarat. Then Gujarat. May have been incorporated in Maharashtra. They might have shifted to Gujarat. As of now, where is your registered office? Gujarat. Then domicile is Gujarat. I hope you understood. So don't confuse with birth. Okay. See, simplification is one thing. Don't oversimplify. That's also dangerous in law. Residence, absolutely. Residence here is, see, for you and me, where we stay is residence. Company does not have a physical presence. Therefore, where the registered office is situated is the domicile. Very important legal point, my dear friends, because all legal notices have to be served at the registered office, not anywhere else. They'll become illegal. See, on that one clause, you can defeat and go. Suppose you're filing a suit against a debtor, you have to find out where is the registered office and serve notice on the registered office. Suppose you serve it on the corporate office, some superb lawyer like my son will stand up in the court and say, invalid, Your Honor, because the notice was not properly served on our case, on us, Your Honor, like that, on me, Your Honor, on us, Your Honor, like that they will say, oh, dismiss, go, again come. Okay, so be very, very careful while doing this. For example, I'll tell you a simple case. One of my clients, they were owed 1 crore by one company. So we had a meeting how to collect 1 crore. Singapore-based holding company, local Indian company, subsidiary is Indian company, subsidiary. I said, don't go for suit, Baba, go for insolvency. Or I suggested go for winding up, but then advocate suggested go for insolvency, which is faster. But the point is, where should I file the insolvency petition? Where should I file the insolvency petition? My client is situated in Chennai, but the debtor is situated in Mumbai. Where should I file? Which tribunal should I file? Should I file in Chennai or in Mumbai? Where the defendant resides. In this case, domicile, clearly registered office is in Maharashtra. Yeah. Mumbai only I can file. Are you able to understand what I'm saying? That is why domicile becomes very, very important. Okay. So why Anil Ambani is once again if registered office is in one state but manufacturing is other state, then different incorporator in that same name and get deduction on tax in some special zone only after. Baba, get one concept. You can have one registered office. Thereafter, you have n number of factory, branch, everywhere. Local GST you have to get registered. Local factories you have to get registered with the local labor commissioner. You have to deal. So large conglomerate big companies, they will have such. Otherwise, why do they need you and me? Pay us 3 lakhs, 4 lakhs per annum, per month. For what? For handling this complication only we are needed. Are you able to understand? Okay, that is we have to do. But ek hi hai registered office. Kaha hai? Where is it? That is the domicile. That's all. Hold on to that one thought. Rest of it is details. So if you're going to have a factory in Jammu, you have to get factory license with Jammu. Yeah, you can't get it from Maharashtra. Jammu only are having the factory now. So you have to, first of all, you have to create a branch there, Jammu mein, and then you have to go to the Jammu guys and get the factory license from them. Everything else you have to do in Jammu only. Or rather, Jammu and Kashmir, or whatever they call it themselves. Why Anil Ambani sells his personal properties to pay off debts when the company law says that he's noted? Hey, Keshav, this is a wonderful question you are asking, but you should be asking who? Me? Either Anil Ambani's lawyer, or Anil Ambani's auditor, or Anil Ambani himself. How do I know? I am not Anil Ambani's friend. I didn't study with him in school. Why he is selling his personal property, God only knows. Maybe I have a feeling he might have given personal guarantee for the company's debts. I'm only assuming, I don't know. Personal guarantee. So in case the company cannot pay, Anilji will have to pay. You have to sell this personal property and only pay. Are you able to understand what I'm saying? So I don't know, yeah, seriously. A, Keshav, I don't know. B, I don't care. Because about Anil Ambani, I'll tell you my view. The minute Reliance Industries Limited shares were demerged, Reliance Industries Limited got demerged, and ADAG came. 4 new companies came into existence. They were carved out of Reliance Industries. I was a shareholder of Reliance Industries, okay, where I held shares. So for 1 share of Reliance, I got 4 shares in these 4 ADAG companies. Totally, I had 5 shares. For one Reliance share, now I have 4 more. Now the beauty and the magic of the stock exchange was, my 1 Reliance share was worth 1,000. Na? After the demerger, what should have happened? I should have 500 here, and these 4 fellows together should become 500. Na? No. The market saw value in these 4 fellows. From where they got the value, okay, God only knows. But the Bakras were willing to pay me another 1,000. I had Reliance shares, 1,000. I with me. Then these ADAG came. The minute I heard that Anil Ambani is in charge, that minute I sold those shares at a decent profit, which means my entire Reliance, my purchase cost was 150 rupees, 200 rupees, completely earned. Now Reliance free for me. So I sold ADAG. So about Mr. Anil Ambani, my views are, I would rather, if he sells everything also, what is my problem? Okay. Your good question, but you should have asked Anil Ambani only. Okay. I don't know Anil Ambani's auditor or his lawyer. If you know, you please ask. Just joking, Keshav. Don't take me seriously. Wonderful. Good question, but it means capital clause contains authorized capital. Exactly. Authorized capital only will be there in 2 ROCs in Mumbai, 1 Bombay and 1 in Pune. Yes. Maharashtra, Tamil Nadu also has 2 ROCs. Does UT have Uttarakhand, Uttar Pradesh, which UP or UT? I'm not aware. UP must be having an ROC. Hey, you know what? You go to the Google and search. I will also do it tomorrow and I'll get back to you. UT means what? Uttarakhand. I don't think they have a ROC. UT is Uttarakhand, right? UT does not have. UP may have. I'm not really aware. I'll have to check out. And not a problem. You just go to Google, MCA website, you will find number of ROCs, jurisdiction. If you just Google now, you will find jurisdiction of ROCs. Immediately you will have. I think Northeast in Guwahati, they have 1 ROC for all of them put together. All the 7 sisters, they have 1, I think. I think so. I don't know. Or maybe they come to West Bengal. I don't know. See, it all is based on the number of companies, the density. Suppose there are too many companies, then 2. Very less companies in 1 state. Then 3 or 4 states will be combined together and taken. For your information, the Union Territory of Pondicherry has an ROC. Small Union Territory of Pondicherry has an ROC. You know why? Because Pondicherry was enjoying so many tax benefits that many companies used to set up business in Pondicherry. Density of company in Pondicherry became very high. So the Tamil Nadu ROC, who was handling Pondicherry also, they said, no, we can't handle. So the Pondicherry got its own ROC. Small office they have with 1 AROC, I think, and 1 ROC they have. Good. Thank you, Manavji. Nominee is not bound by anything. Even the OPC member is not bound by anything. Nominee is not bound. Already we saw in OPC, nobody is bound. Okay, for fully paid share, nobody is bound. This Anil Ambani matter, I don't know. Okay, why he is selling personal property and all, seriously. But if you are a shareholder of a company, then your liability is limited to the amount, if any, unpaid on the share. That's all. Okay. UT, I'm not aware. I'll check up and get back to you. Why are there 2 ROCs? That's what I told them. Yeah, see, they have separate, meaning, see, districts are there, na? So each man will have 1 set of districts and that man will have. To my knowledge, Mumbai has Mumbai only and Pune has the rest of Maharashtra, my understanding. See, you need not remember all this stuff. It will keep changing. 1, 2, all you need to do, hey, today we are in the world of chat GPT and AI, boss. Why will I remember all this stuff? If I'm going to see a guy comes to me and says, Mr. Srikanth, I want to incorporate a company in Uttarakhand, then only I'll start asking myself, is there an ROC in Uttarakhand? Then I'll call my office manager and say, check up if there is a ROC in Uttarakhand, man. No, sir, Uttarakhand mein nahi hai, oh, UP mein hai. Okay, then put it in UP. That's all. That's all. So these are details that can be easily worked out. But for knowledge purpose, yes, I will find out if Uttarakhand has because in the last 1 year, I have been extensively traveling in Uttarakhand, right up to Badri, Kedar, Gupta Kashi. This side, I went all the way up to Dehradun and, Mussoorie, Dantoli and all. So definitely, I would like to know if Uttarakhand has a thing. UTR, Union Territory. Yeah, Union Territory of Pondicherry has a ROC. Pondicherry was a Union Territory, they had an ROC. Okay. Nothing. The logic is density, meaning number of companies. If the number of companies reaches one level, then they need one ROC to handle them. UK is Uttarakhand. Correct. UK, again, whether UK has, if you ask me, I don't know. As in the case of 7th clause, it says about the subsume, single subsume. Why doesn't it include 6th clause? Yeah, it is there. See, this 7th clause now, it is there for 6th also. I have not put it here. Only for OPC, I am putting it. For 6th clause, here instead of I whose name, you will have we whose name and addresses are given below, are desirous of forming a company in person of the Memorandum of Association and agree to take all the shares in the capital of the company against our name. Same wording will be here in 6th clause also. Okay. Manavji is clarifying. Uttarakhand and Uttar Pradesh, that is what I was also thinking. Kyonki, see, Uttarakhand is a hilly terrain. Your Corbett ka area, Jim Corbett ka area hai, or this side, that's a completely, what is that gentleman, Randar guy. It is the land of those guys. So tigers and lions, not lions, tigers, leopards. That is the area there. And temples and rivers. Beautiful place. So why will form a company there? But if somebody wants to form, they will come to UP and form. That's all. Okay. Beautiful place. Uttarakhand should not be spoiled by that urbanization. Let us keep Uttarakhand a beautiful state where we can be proud of it as a great place. Not just for the religious part, but for the natural part. It's a great place. That is India. The heart of India is in Uttarakhand. So we should keep it safe and not make it urban like Mumbai or Chennai or, whatever. That is why possibly they separated Uttarakhand into a separate state and gave it a status of state. Beautiful. So wonderful. I'm really loving this interaction. And I feel like, I'm actually seeing you and talking to you. It's like, imagine, I'm a blind man. Can you imagine? Though I can see, I am blind because I cannot see you. Imagine if a blind man is to conduct a class. That is what I'm doing now. I cannot see your face, but I'm getting to know you only through your queries. I'm giving you personalities. I'm giving you faces. Okay. I'm giving you identities. Maybe if at all at a later stage in my life, I don't know when, already Buddha ho gaya. So if I get the good fortune of meeting any of you, say that side when I'm coming that side to Punjab or, Chandigarh or wherever you meet me and you see this man, okay, you just come and tell him, sir, I know you. I've seen your ugly face. You used to take classes for us. Be a joy to meet you and say hello to you in person. So now coming to the point, the memorandum of a company shall be in respective forms specified in tables A, B, C, D, E and E in schedule 1. A, B, C, D, E. The articles of association will be F, G, H, I, J. Now, should I know this by heart? Yes. Because it will come as a multiple choice question. That is why. So they might say the memorandum of association of a company limited by guarantee and having share capital shall be in table E, table D, like that. So just get to know this. Quickly, we will run through it. Memorandum of association of a company limited by shares, table A. By guarantee and not having share capital, B. Guarantee and having share capital, C. So, memorandum, guarantee, not having, B. Share capital, B. Having share capital, C. Unlimited liability company, D. So, A, B, C, D, right? Memorandum of association of an unlimited company having share capital, D. Sorry, not having share capital, D. Having share capital, E. You can easily remember, no? Limited by shares, SIRF, shares. Then guarantee, not having shares. Guarantee, having shares. Then unlimited, not having shares. Unlimited, having shares. A, B, C, D, E. Then articles of association. Same. Limited by shares. Guarantee, having share capital. Guarantee, not having. Here it's ulta. Unlimited company, having share capital. And unlimited company, not having share capital. Straight remember it. They may see in the multiple choice part, MCQ part, they might test you on this. Now, what we are going to do, we are going to talk about some unique features or some salient points regarding each clause. Some additional points. So we saw what are the clauses. Now, for certain clauses, mainly name, domicile, and objects, we are going to see some more, shall we say, relevant points. Name. Now, normally when names are to be selected, we won't bother whether the name is already used or not. For example, my name is Srikanth. I spell it S-R-I-K-A-N-T-H. S-R-I-K. Of course, many of you, if you are writing my name, you say S-H-R-I. No, unfortunately, my name, it is wrong. Actually, the Sanskrit word is Shri, S-H-R-I, but somehow I have spelling it as, in Tamil Nadu, we spell it as Sri, S-R-I-K-A-N-T-H. But there is a famous cricketer, I'm sure you know him, Krishnamachari Srikanth. He spells his name S-R-I-K-K-A-N-T-H. Now, so my father and mother, when they selected this name, they did not go anywhere and check, can I have my son's name as name? No, already taken up here, you can't have it. No. So we'll have so many namesakes. We'll have namesakes. Same persons having same name. Many times students will attend my class, their name will be Srikanth. Okay, like that. In the Rotary, in Chennai Rotary, there are 3 Srikanths. A lot of confusion. Once one surprise gift was sent to one Srikanth. That came to me, to my address. It didn't come by accident. They put my address. But I knew that because that was another Srikanth. I know who he is. So I redirected it back to him. Okay. Now the point I'm trying to make, my dear friends, is for company, you cannot have identical name. The name stated in the memorandum shall not be identical with or resemble too nearly to the name of an existing company registered under this act or any previous company law. So identical you cannot have. For example, if you want to incorporate Reliance Industries Limited, sorry, already taken by the great Durbaiji. So you cannot have Reliance Industries Limited. But can I have Reliance Tires? Maybe. If there is no Reliance Tires, even then, so you have to be very careful. Okay. Of course, you can argue and you can say, look here, there is no Reliance Tires in that group. Why can't I have? But then, what will happen? Suppose you have a company called Reliance Tires. What will everybody think? That you, in some way, you are connected with that group. No? So, that is for trademark. Please understand. So, they will say he is a trademark owner for the word Reliance. So, you please go and it is permitted like that. So it should not register. So not later on you will see trademark also. Here we are talking only about name, but later on you will see a trademark owner can object. A trademark owner can object. Okay. Or you cannot have a name which would constitute an offense under any law for the time being in force. Okay. Terrorism unlimited like that. No, you cannot have because that's violating Prevention of Terrorism Act, Terrorism Services Limited. No, you cannot have. Okay. Is undesirable in the opinion of the central government. Undesirable. So, not in good taste, bad like that. It's possible. Some names are undesirable like that. But you see, what is desirable and what is undesirable. Government cannot decide, but then they say something called public policy, morals, etc. are violated. Some names are there. Like, for example, you cannot have prostitution limited. Even if prostitution is legalized in a particular state, you cannot have a company that says prostitution services limited like that. Sorry to use that word, but after all, you are all adult human beings, so you can understand. That's undesirable. You cannot have such names and all and form companies and all that. Am I correct? So, in fact, a lady tried to do this in Chicago, prudish Chicago. You see, believe me, when you think US people are modern and all, they are the most, shall we say, prudish people. They are so hidebound as to what is moral, what is correct. In India, we are very liberal. We are the people who produce Rajneesh and Nityananda. So we are very liberal, whereas they are very, very prudish. Maybe they dress a little differently, but their behavior, they are very, very, very narrow-minded in terms of what is good behavior, what is bad behavior, undesirable and all that. Whereas in India, we are a little more liberal than them, I think. Correct. See, Adidas and Adibas. See, the Adibas, 100% Adidas will keep on fighting battles with that fellow. Not only in terms of company name, but even in terms of trademark itself. And correct, I was using the word Dubaku. Exactly. You got the point. Okay. I can't have a company called Dubaku Limited, right? Sorry. Correct. Because I don't know how many of you know, Dubakur actually means fraud. So you can't have a company called Fraud Limited. Okay. Dubakur. In Tamil Nadu, I don't know how that name came. When you say that fellow is a Dubakur, it means he is a fraud. He will tell lies and he will tell any nonsense to make money. Such a person is called Dubakur. So that's what it means. So that's what Darshan has got the humor. Of course, you see, the point is already company law is a dry subject. So if I make it even more dry, what is the point? That's why I'm using such names. Sometimes I use names like donkey, monkey and all. One person got very angry with me in the final class. How you can say donkey, monkey and all. Chaliye was just joke, yeah. Just joke. Nothing more than that. Huh? Sense of humor also should be prescribed in the syllabus of the Institute of Chartered Accountants of India. Maybe one subject should be, one topic should be having sense of humor like that. Because believe me, for a chartered accountant in practice, sense of humor is much more valuable than all the knowledge. Because once you are able to make the client see the funny side, then he'll be willing to listen to what you are saying. Okay. So believe me, I have been practicing 30 years now, very successfully. Whatever. It's a mid-sized firm, we are willing to grow 600 clients. How? Not by being serious. According to instruction. No. I'm very casual. I'm very relaxed. I joke with my clients. Because after all, he's running a business. He's coming to me to be sure that he doesn't make a mistake legally. My job is to guide him and help him make more money in terms with compliance. Yeah. Having defined my role, why I should be serious? I can be relaxed. What is there? I can joke. I can make him laugh. This is my humble view. Of course, subject to your view that chartered accountant should be serious. Always according to section so what you are doing is wrong. Correct. He is doing something wrong. Nah? Tell him, boss, what you are doing is like this. Don't do it. Oh, sir, now I understood. They are happy. Once you make them laugh, they are willing to listen to what you say. Okay. Good. So Adidas and Adibas, Bisleria, Poppins and Poppings, like that. I can keep on giving you. Okay, what is an undesirable name? A word or expression which is likely to give the impression, see, we are talking about undesirable name, that it is in any way connected with or having patronage of central government or state government or local authority, corporation or body. That's why you cannot have Tamil Nadu, Maharashtra or Bharat or national, central. No, these are all not prohibited. You should give valid reason why you are calling yourself by that name. Yeah. So, correct, not behaving like Hitler. Correct. Such word or expression as may be prescribed unless the previous approval of the central government has been obtained for the use. So, you can use national, you can use central. But if you want to use these words, you should justify to the central government why. So, first you have to get the approval for use of that word. Then only the registrar will register the company. Otherwise, the registrar will reject. So usually only government companies and government sponsored companies can use. So automatically they will get a GO and come to the ROC. Not a problem. Now, Rule 8 of the company's incorporation rules determines whether a proposed name is identical with another. So it's there in your institute material. You can go through it. Basically, it's not enough if same spelling is not there. Even same pronunciation should not be there. Homonym we call it, or not homonym, homophones, where to the ear it will be the same. It look same. So we should not use such names also, is the point. So registrar should exercise due care to the names are not in contravention of the provisions of emblems and names. There's a GO, General Circular, very clearly saying you should not misuse the names of emblems like that. You cannot see in the logo, you cannot have the government castle. Each state government has its own logo. And of course, Indian government has the logo of how many lines? How many lines are there in the Indian government car emblem? How many lines are there? You know that there are lines from the Ashoka pillar. We have taken the lines. How many lines are there? Bharat Petroleum is not an undesirable name, Baba. It was earlier a state-owned corporation, Bharat Petroleum Corporation, that became Bharat Petroleum Limited. Have you read the bottom part? The central government can permit you. It's not prohibited. So if you form, it will become undesirable. But Bharat Petroleum Corporation was formed by the government of India, by the Ministry of Energy, long ago. Okay, possibly before you were born. Okay. 38 lines are. No. 24 are. Chakras, in the chakras, the number of, the spokes you are saying. I am asking, yes, all of you got the point. 4 lines. It is not 3 lines, 4 lines. But in a 2-dimensional depiction, you see only 3. But there is a 4th line, which is on the other side. You cannot see it. Sometimes when I go to meet as a government official, and I want him to use his quasi-judicial, function and apply his mind and not be, like a government authority. See, you are here to serve the citizens of the country and you are here to hear their problems. So when I want gently to point out, most government officers, they will have the 3-dimensional Ashoka pillar, Sarnath pillar, with the lines on top. There will be 4 lines. Then I will tell them, sir, these 3 lines are looking at us, the citizens. We have to obey the law. We agree, sir. But that 1 line is looking at you, sir. So you should also be careful in administering the law. As a government servant, remember the 4th line is looking at you. It is looking at you. It is ensuring that you are not misusing your power. That you are giving a reasonable opportunity. That is a magic word. Once I use that word, okay, Shrikant, come tell me what you want to tell. Now you are willing to listen. Now I will talk. Because reasonable opportunity. The 4th line is reminding you again and again that you should give a reasonable opportunity to the citizen to make his case. Okay. The unfortunate problem today is in faceless assessments where the line is there. Nobody is there, only faceless. Okay. Yeah, everybody got it right. 4. I asked how many lines. Everybody is giving spokes. 24 spokes, agreed. 4 lines. Okay. Power, courage, confidence, and pride. Okay, beautifully said. Thank you. Let's be proud. You see, you might ask me, sir, in company law class, why are you talking about Sarnath pillar? Not like that. I'm just giving you this. See, some of these things you pick up now, you never know when you will use it in your professional career. Whether you are in practice or in service, suddenly, if you take this out and leave it, you will be impressing people. Okay, reservation of name. Before you can form a company with a particular name, that name should be reserved. So a person may make an application in such form and manner and accompanied by such fee as may be prescribed to the registrar for the reservation of a name set out in the application. So what we normally do now, that spice form, in that we will apply for the name and also we will file the incorporation paper. So they will first approve the name, then with that name, they will incorporate the company. So in case, what we do is, we will not give one name, they will give us options, 1, 2, 3, up to 4 options you can give. So if you don't want this, but by and large, when we will ensure that we get that name and we are able to go, because we will check, we will see already existing name is there. We will advise the client, please don't go for this name, go for slightly change. Then we will go for some kind of alteration of name. Slightly we will modify it. Then we will add some prefix or suffix. Then we can get it. Once the name reservation, Lions, Lions, Lions. Okay, sorry. Good point. I didn't realize that. How many lines are there? Sorry, my mistake. Indian pronunciation, sorry. Lion, Lion, lion. What do you say in Hindi? Share, share. Share, na? Lion is share. Tiger is Bagh, na? Lion is share. So, good, no problem. See, 24 spokes also correct. Now, once an application is received, the registrar may, on the basis of the information and documents, reserve the name for a period of 20 days. For this, I think you pay 1,000 rupees now. You have to pay 1,000 rupees for reserving the name. Where after reservation of name, it is found the name was applied by furnishing wrong or incorrect information, then if the company has not been incorporated, the reserved name shall be cancelled and the person will be liable a penalty of 1 lakh rupees. But if the company has already been incorporated, then the registrar may, after giving the company an opportunity of being heard, see, they may come and say, sorry, sir, we didn't know this, blah, blah, whatever. Okay, then the registrar may give the opportunity of being heard, so direct the company to change its name after passing an ordinary resolution, or take action for striking off the name of the company. Or in case the company has already incurred liability, collected money and all, then make a petition for winding up. See, remember, if the company has not had any activities, then it can be struck off. Means the name can be removed from the register. But even if they have had some monetary transactions, their bank account has been opened, deposits have come, you cannot strike off. You have to wind up. For a company incorporating after 10 years, can I reserve the name now itself? Did you see this? You can reserve the name for a period of 20 days. Again, you have to renew it. Again, you have to renew it. You calculate how many months, how many 20 days to reach your 10 years. Your question is answered, Darshan, which also shows, Darshan, that you are not concentrating when I made this point. Correct? So concentrate. 20 days is what you'll get. So how many 20 days you want, you select and keep on paying into the bank. And they keep on increasing the fee also year after year. So finally, you'll end up, for the last set of 20 days, you might pay 20,000 rupees per renewal. Wind up means wind off. No, wind up. Winding up. Did you see that? It's not off. This is up. Winding up means, see, when a company has to be closed, you cannot simply do it. The company will have assets, na? Those assets will have to be sold. The company will have liabilities, na? Means they have to pay money to people, na? Those monies have to be paid. Finally, there will be some surplus, na? That will be given to the original shareholders, na? Contributories. In case deficit is there, if there is any liability from the shareholder, they will collect it. Otherwise, namam, and then go. That's all. That process is called winding up. I will repeat. That process of selling the assets, paying the liabilities, etc., is called winding up. This is a separate chapter in the Companies Act. You will study it when you come to final. Okay? But the winding up is the process. Finally, when there are no assets and all liabilities are either settled or closed, nothing, no more money, then the person called liquidator, he will go to the tribunal and he will file to the official liquidator and he'll file a report saying everything done, final report. Then the OL will do an investigation that this company has not violated any law and all, and finally report to the tribunal that completely wound up. Once that report is given, the tribunal will pass an order for dissolution. At that time, the company will be traded. That will be noted by the registrar. The company's name will be removed from the register. This process is called winding up or dissolution. Not necessarily for your exam point of view, but since the word is used here, I'm giving a reasoning for it. By mistake भी तो git name दे सकते हैं ना तो इतना fine क्यों दे? By mistake? What to do? Not by mistake. Madam, you are not reading. Was it by mistake? Was it by mistake? See here. The name was applied by furnishing wrong or incorrect information. Only then fine. You understand, Kushiji? I cannot speak Hindi, ma. So kindly do not mistake me for not speaking in Hindi. Okay. But you understood now. The person is giving wrong or incorrect information. That is why they are getting so much fine. Okay. After dissolve the company, I will choose their name. Yes, you can. Once the name of that company has been removed, you can. Definitely, Madhavji, wait for that opportunity for Reliance Industries to be dissolved. Then you will get it. Never. Okay. I'm not joking. I'm laughing as a shareholder of Reliance. See, nothing will happen. Even if the market collapses, nothing will happen to Reliance. It will go down. Price will go down. Not below my price. 0. Okay. Just joking. Don't mistake me. So yes, you are right. You are right. Articles. So we have seen memorandum. Now we will see articles. Then again we will go to register office and a little later. Again we will go to register office alteration. Articles means, okay, I'll do one thing. Now that we have come to one level of point, I will give you a nice break. Let's take a break. Aaj to again we will be going for 8:45 because my conscience is there. Now, that day we closed half an hour early, little more than half an hour early. So I will compensate by taking another 15 minutes today. So that half an hour will get compensated. So today, gird in your loins, tighten your belt. We are going to go till 8:45. Inshallah, we will complete some good portions today. So a small break, say for another, now it's 7:35, you say 7:40, maximum 7:45. Okay. Break, sir. Thank you. So welcome back, and as suggested by many of you, better not have a break, but I still thought a brief biology break is there. Darshan wants to go until 10 p.m. That's up to him, but my personal tendency is there. But I would love to teach. Today, let's go till 8:45 and try to complete some more topics. And thank you very much for that. And thank you, Mr. Tiwari, for nice words of that. Yes, definitely. I'm also enjoying teaching you all, which is important. I enjoy this. It gives me energy, especially budding chartered accountants. You're all brilliant people. I'm sure you'll all become great chartered accountants in times to come. So, now, articles of association. Article is again a thing. English, so many, same word has many meaning. No? Article is the thing, like this remote control and other thing. Articles are things. Also, article is some kind of a section or a clause, the articles, okay, by which we agree to be bound to each other. Right? So it's a binding articles. That's why, you are called an articled clerk. When you get into apprenticeship, you'll be called an articled clerk. So there'll be an articles. You'll sign an articles. It is a covenant. It is a contract. It is a binding between you and your principal. So that is called article. Now, so thank you again, Ms. Aisha GB. Thank you. So articles means the articles of association company as originally framed or as altered from time to time. Articles are the bylaws or the internal rules and regulations that govern the conduct of affairs of the company. So they are basically rules and regulations. So memorandum gives object, name, etc. Here, how capital will be issued, how the company will borrow money, how members will be allotted shares, how the transfer of shares will be recorded, how the board of directors will meet, how AGM will be conducted, what is quorum for an AGM, appointment of directors, all that will be given in the articles. So articles are the bylaws, right? Now, the articles of company shall contain the regulations for management of the company. Now, you need not have your own articles. As we already saw, you can adopt table F. So if you're a company limited by shares, you will adopt table F. Table F is the articles of association of a company limited by shares. So by and large, F is very important. Okay, articles as mentioned in table F, because they are the standard articles. But if you want, you can have your own article also. It's not that you should only adopt table F. You can have your own. So long as there should nothing in your articles should contradict the memorandum, and nothing in your articles should contradict the Companies Act 2013 or any other law. You cannot have some illegal things in the articles or anything contradictory to the Companies Act. Also, under the rules, many times you will find article shall provide for this, or the article should contain this. Then that should be there in the articles. For example, private companies' articles should have the limitation of membership, restriction on transfer of shares, prohibition on invitation to the public. Okay, quickly, Darshan asked the question, is the order of clauses in MOA important? Absolutely important. That's why I've given number 1, 2, 3, 4, 5, 6, 7, 8. Number, name only, first is name. Then. So there you cannot change the order of the memorandum. Got it? That is the format. You cannot change it. There is a table A format. What I showed you is a table A format. It has to be in table A format only. You cannot have your own memorandum. The articles in table F, by and large, company will adopt table F. But if you want to have your own, you can. Now, entrenchment is a very peculiar concept recently introduced in the law. Entrenchment. Entrenchment is the process by which amendment or alteration of a clause in the articles of a company is made more difficult. It may require a superior form of majority. For example, articles can be altered by passing a special resolution, but entrenchment will make it more difficult. For example, special resolution is one level. You can say unanimous. So entrenchment means making something more protective. See, appointment of director normally requires ordinary resolution. Appointment of director, ordinary resolution. But in your articles, you can say director shall be appointed by passing a special resolution, in which case it is entrenchment. Because which is difficult to pass, ordinary or special? Special, right? Therefore, you can say special is needed. That means it becomes entrenchment. So appointment of director becomes difficult. Entrenchment will make things more difficult. Okay. Why are you doing it? To protect. So appointment of director, we are saying you need special resolution. Because we feel anybody and everybody should not come and majority cannot bring them in. Special majority is needed, like that. We have used the word special resolution for the first time. Up to now, we have not used the word special resolution. The word special resolution is not defined in section 2. It is defined in section 112. I think so. I am very vague on the section numbers. You 1956 law, you asked me, I used to be able to tell that well. Now I have forgotten that also. Okay. Now I have forgotten. This I am unable to remember or not interested in remembering. Okay. But once upon a time, I'm not joking, I started teaching Companies Act in 1992. My first ever class on Companies Act was in September 1992 when I entered the classroom for teaching company secretaries. That was my first class. In fact, the ACS Institute, they said you are not a teacher, like you're not a recognized teacher. So this is a trial class. We won't pay you for it. You'll see. But that class was very well received, and there were about 5 lawyers in that class. They wrote feedback saying, we in our law college, we have not studied like this. They have not taught us all these things like that. So then, of course, I became, but around 1996, 97, almost 200 sections of the 56 Act, I know by heart. I loved it. In class, I never used to take the book. I was a barrack, I will never bring. I will bring the barrack, keep it on my table. I will never teach. I will be telling the section from memory, and I will explain the section. Like that, I used to do. I will dictate notes in class in those days. No PowerPoint and all at that time. Okay, only blackboard, mouth, memory. That's all. With that, we used to work. I used to love that law. Then this 2013 abomination came. After that, I've lost interest in remembering sections. Okay. Now, coming to the point, I'm going to ask you a question. We will get it done in this class itself, because from now on, we are going to see the word special resolution again and again. Therefore, according to you, what is a special resolution? Just like you answered me for, the ultra vires, again, you can give your answers. What is a special resolution? Or when do you say a special resolution has been passed? This will be taught to you when you come to management and administration. Still, before that, I am going to use this term many, many times. So without knowing what it is, how I can teach? For that spirit alone, I am asking, what is a special resolution? If you know, if you know it, I'll be happy. Otherwise, we will see. Madhav Tiwari is asking, who is made articles? Members only, na? At the time of incorporation, the promoters will be there, na? They will only prepare the articles. Obviously, they will not have the expertise, na? So, company secretary, I don't know, or chartered accountant. I have a standard articles. See, nowadays we blindly adopt table F. See, we blindly adopt table F. This is then we blindly adopt it. It is not. It is there. If you go through the thing, you will find it. We blindly adopted. Table F is the format. It is. So it's straight away. But sometimes you can have your own also if you. Okay. Now, who writes? That is either company secretary, chartered accountant, lawyer, or Table F. Straight away adopt Table F. That's all. Which is written by the ministry. I hope that answers your question. Alteration in article association by board of alteration of articles is done only in general meeting. Sir, memorandum and articles can be altered only by passing resolution in general meeting. Articles can be altered only by passing special resolution in general meeting. Any clause in the memorandum, if you want to touch, if you want to change, it can be done only in a general meeting. Most of the time, you have to pass a special resolution. That is why I want you to know what is a special resolution. Say shareholder made, what do you mean? Yeah, it is, who is shareholder? The memorandum, it is, Tiwari ji, how do I answer you now? It is, see boss, they don't have the expertise to write the articles and all. There is a standard format. So when they come to me, I'll say, Table F, take it like that. Or either a chartered accountant or company secretary or advocate will give them. That is all. Or Table F is there, Baba. You go through Table F, you will understand. It is the standard articles that will be adopted. You got it? So made by shareholders, ma. Like, see, who wrote the Constitution of India? People of India, every one of you know, Ambedkar wrote it. But once it is adopted in Parliament, it is as if all of us have written it now. We have all accepted to it now. That is how it is. You understand? Once the signatory to memorandum sign now, memorandum and articles, they are agreeing to it. That's all. So who made it means who made the Constitution? Constitution committee headed by Dr. V.R. Ambedkar. Then so many other great men were there. They did it. So you didn't write it, I didn't write it. But we are bound by it now. It's like that. Majority of members should give consent. Maximum voting by shareholders. Passed in Parliament. Special. Boss, Kushi, we are talking about company law. Company's general meeting ka resolution. So parliamentary and all don't. So bill for constitutional permission of directors. 1/4 of the directors have voted in favor. Special resolution passed by company in the AGM for some special purposes for alteration of. Okay. Special resolution means it is taken by the top management. Why there will be more rules and regulations. Hey, seriously, I'm going to take down all these definitions and keep it. Whenever I'm feeling bored, I will read it. Because none of you has given the legal definition of special resolution. A decision, Arya's Shanbag. A decision taken rarely, which is important and confidential, and which will be followed for a long period thereafter. Madam, you are all really great, yeah. I tell you, you should all write novels. Hey, seriously, don't take me. If it's a real class, you will see that I'm being humorous only. Abba, at last, Mohammed Bilal is coming with a percentage. He says 75% or more of vote. Now, at last, we are in the ballpark. So, majority, if you want special resolution, what is the majority required? Boss, special resolutions are passed on special occasions. No doubt about it. This is a BCom level answer. Many BCom students, the professor will ask, distinguish between special resolution and ordinary resolution. First thing they'll write, special resolutions are passed on special occasions. See, the idea is, the matter is so serious that a simple majority is not enough. So to understand this, okay, now, jokes apart. Let's come down to knowledge. I'm going to now teach you ordinary and special resolution. Abhito, I'm going to teach you. Again, professor or faculty will teach you in Nikam 2, management and administration. But right now I'm teaching for simple reason. I'm going to use this word. Okay. So in a general meeting, members are attending na. They only will pass the resolution. Means those members who are attending in person or by proxy, we saw that na in total voting power. In person means member himself has come. Proxy means member has not come, but somebody with his authorization has come. These members and proxies together will be the quorum. Proxy cannot be counted for quorum. Members will be counted. Once the quorum is there, then the matters will be taken up. For each matter, there will be a resolution. That resolution will be proposed and seconded. Then it has to be put to vote and passed. A resolution is passed. Listen to me, if you want to take notes also. A resolution is passed when it is agreed to by a majority. A resolution is passed when it is agreed to by a majority. In ordinary resolution, it is a simple majority. What do I mean by simple majority? Means number of votes cast in favor by members present and voting in person or by proxy. The number of votes cast in favor by members present and voting in person or by proxy or through postal ballot exceeds the number of votes cast against. That is more than the number of votes cast against. This is called simple majority. There is number of votes cast in favor. You count it. You get one number. That number should be more than the number of votes cast against it. Then you got an ordinary resolution. So number of votes cast in favor should be more than or exceeds or the number of votes cast against. It is called ordinary resolution. Are you clear? Have you understood ordinary resolution? Yes. Now, special resolution. The number of votes cast in favor by members present and voting, whether in person or through proxy or by postal ballot, shall be, listen to me, not less than 3 times the number of votes cast against, if any. I'll repeat. Number of votes cast in favor, the number of votes cast in favor, whether by member in person or by through proxy or by postal ballot, all votes are counted. On a poll, see, because the minute the proxy gets into the game, no show of hands, because proxy cannot vote on show of hands. So straight away poll. On a poll, 1 share, 1 vote. We saw that already. Total voting power. Voting power, 1 share, 1 vote. Once it is on a poll, 1 share, 1 vote. So number of shares, number of votes. So out of the total number of members attending, some will be in person, some will be proxy, whatever it is. How many votes, how many shares? So how many shares are you counting? So the proxy will say, I'm having so many proxies. So number of votes, done. That restriction is there and all. When you come to management and administration, you will learn in detail. But point is, number of votes will be based on number of shares of those members present and voting. A guy sits at home shaking his head, he is not counted. You have to come to the meeting, either in person or send your proxy, or we will send the postal ballot form or electronic voting form. There you vote. Then at the meeting, everything will be counted. And then we'll see how many votes are in favor. Number of votes cast in favor shall be, number of votes cast in favor shall be not less than 3 times the number of votes cast against, if any. This is you will, if you can remember it, I'll be much obliged. This is not my topic in the sense, this topic, but it is a fundamental knowledge. The answers that most of you have given are funny, vague, wrong. Now you know the law. Am I correct? So ordinary resolution, number of votes cast in favor shall be more than the number of votes cast against. Suniyaji, please listen to me. In special resolution, number of votes cast in favor shall be not less than 3 times the number of votes cast against, if any. Okay. Got it. So Keshav is asking, what happens if 100% vote is given to a resolution? Then you go and complain to the registrar of companies. See, there is something called public interest. So if Keshav Goyal very strongly feels that the decision taken by the company, by even 100% majority, is against the interest of society, you can complain to the registrar. Then the registrar will do what is known as investigation. And at the end of that, they will decide whether it is correct or wrong. As a citizen of the country, you can go and make a complaint. You are entitled. As affected party, you can definitely. So see, the resolution is binding only on the members on the company. It is not binding on the public. Okay, when a company passes it's as simple as that. When you decide to do something in the morning, you don't have to tell anybody. You think of it, it is enough. But when a company decides to do something, who is thinking? So that has to be documented. That is called resolution. See, in the morning you get up, you will not say, resolve that today I shall consume 2 parathas along with curd and achar. No, you will eat it. But company, if it wants to do something, before that a resolution is to be passed. Resolve that the company be authorized. Or they can authorize the board to do it. Then the board of directors will become. I'm going too deep into the management administration. But I'm saying why I'm telling all this, get that fundamental framework clear. So resolution is very important. Ordinary hai or special hai. Ordinary, simple majority, number of votes cast in favor exceeds. Special resolution, now all of you go back to your own definitions. And if you don't laugh, then you don't have sense of humor. I was expecting at least one person to say, at least my friend Bilal, at least put 75%. First, only man who put a number there. Everybody else, oh, you are your Shan Bagla, my God, today my day is made, ma. I'm going to copy that and keep it. I mean, nothing wrong. You got a very good articulation skill. You got very good language skills. Okay, I'm very happy. Your ability to use English is very good. But try to combine it with knowledge of facts. Yeah. Boss, Bilal, proxy ka vote, how? Number of shares, number of votes. Member, number of votes, number of votes. So, depends on number of shares. Suppose the proxy is the proxy for 2 members. Those 2 members together are holding 400 votes. Proxy will have 400 votes. A member may hold 1,000 shares, then 1,000 votes. Depends. Question is, for that registered folio, how many votes are there? How many shares are there? That many votes. Okay, good job. Thank you for patiently listening to a topic which technically is not part of this, but every time I tell special resolution from now on, remember, the number of votes cast in favor shall be not less than 3 times. For example, at a meeting of the company, yeah, once you don't know, now you know, Darshan. Now you cannot give. That's what I have. Up to now, all of you did not know. Now you know. From now on, you should know. Are you able to understand? In the 5th chapter of the Bhagavad Gita, Bhagavan says, very beautifully he says, Ajnanena avritam jnanam, Ajnanena avritam jnanam. Jnanam is already there. Okay, it is covered by Ajnana. Knowledge is, you already possess the knowledge, but it is covered by a veil of ignorance. All the teacher has to do is to remove the ignorance. Knowledge is automatically coming out. So I have given, either remove that ignorance, now you are having the knowledge. And you have to proceed to hold on to that knowledge. That is up to you. Okay, good. So, now, entrenchment is one thing. Okay, you ask me, has any company done any entrenchment? Only fool will do entrenchment. Baba, why will I put up for myself? Yeah. No promoter will do it. No person who is drafting the articles, as Tiwari was asking, they will be doing foolishly entrenching. But sometimes where the company is being mismanaged or where the shareholders have a doubt about the MD and all, they might put entrenchment. They might pass a special resolution amending the articles by which they will say, to do this, you have to pass such a resolution, or to do this, board cannot do. You have to come to me. You have to come to the shareholders, like that. That is called entrenchment. But the articles may contain provisions for entrenchment to the effect that specified provisions of the articles may be altered only if conditions or procedures that are more restrictive than those applicable in the case of a special resolution are met or complied with. So, normally articles require special resolution. Means 3 times, but you can make it tougher. The provisions for entrenchment shall only be made either on formation of a company or by an amendment in the articles. That amendment, for entrenchment, for bringing entrenchment provision, that amendment should be agreed to by all the members in the case of a private company, by a special resolution in the case of by all the members of the company in the case of a private company, by a special resolution in the case of a public company. So only then you have to do it. Yeah, thank you, Darshanji. Where the articles contain provisions for entrenchment, whether made on formation or by amendment, the company shall give notice to the registrar of such provisions in such form and manner as may be prescribed. So, entrenchment is a concept which is there, rarely, or I should say, never used. It is there. So, the articles of a company shall be in the forms of table F, G, H, I, and J, and schedule I, as may be applicable. They contain model articles. Tiwari ji was asking how it is made, how it is made. I think Tiwari only was asking. Tiwari ji was asking. Madhav ji was asking. So this is how you have to see, as per the law, section 5, you have to adopt that. The company may adopt all of the or any of the regulations contained in the model. That's why they say may. If you want, you adopt all. If you want blindly, you say table F will apply. Or you selectively pull out table F. Where you want to make tougher or different, you can have. So long as you do not violate the memorandum and act. Okay. Now, a company registered after the commencement of this act, insofar as the registered articles of company does not exclude or modify the regulations contained in the model articles, those regulations shall, so far as applicable, be the regulations of the company in the same manner and to the extent as if they were contained in the duly registered articles of the company. In other words, if articles are silent, the appropriate provisions of the model article shall prevail. Suppose you have decided to have your own articles. So you put blah, 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 many things, which are all correct, not violating the act and all. But for certain matters, you have not provided at all in your articles. Then, where your articles are silent, the appropriate provisions of the model articles shall prevail. By and large, most companies will be having only table F. Because most companies are public or private, limited by shares. So they will have table F. So table F provisions will apply, most of it. Save as otherwise expressly provided in this act. Meaning, wherever in this act they say articles can provide differently, then that can be so. If that is not provided in this act, sometimes in the act, they will say the articles, unless the articles otherwise provide. There are a few sections. 52 and all are there. 152 and all are there. Unless the articles otherwise provide. If that is say, then articles can provide otherwise. But if that is not stated, then the provisions of this act shall have effect, notwithstanding anything to the contrary contained in memorandum, any agreement, or any resolution passed by the company in general meeting or by its board. Whether same is registered, executed, passed before or after the commencement of this act. So, memorandum, articles, agreement, resolution cannot violate the act. Memorandum, articles, any agreement executed by a company, any resolution passed by the company in general meeting. When members are passing, it is general meeting, ordinary special. When board of directors passing, only board resolution, there is no ordinary special. In board resolution, there is no ordinary special. Only simple majority. Once the resolution is passed, it is called board resolution. That is all. In board resolution, there is no ordinary special. Only in general meeting, members ka resolution, ordinary special. Whatever it is, such a resolution or any agreement, memorandum, articles cannot violate the act. Act will have effect, notwithstanding anything to the contrary contained in this. So, which is the supreme act? After that, memorandum. After that, articles. After that, agreement, resolutions. So, topmost is act. Memorandum is subject to act. Articles is subject to memorandum and act. Agreement, resolution subject to memorandum, act, and act. Memorandum, articles, and act. You got the hierarchy? Now, any provisions contained in the memorandum, articles, agreement, or resolution shall, to the extent to which it is repugnant to the provisions of this act, become or be void as the case may be. Repugnant means unacceptable, sort of dirty, repugnant, unacceptable. Okay, that is what it means. So if it is repugnant, then it will become void. See, the act is providing in one way, you are providing in another way, which is not in accordance with, unacceptable. then that provision in the memorandum or articles or agreement or resolution shall be void. Okay. This section 6 starts with the words save as otherwise. It means that if any other section of the Act says that article can provide differently, then such provision shall be valid. For example, section 47 of the Act deals with voting powers. We will see that when we come to share capital, we will see that. And a notification dated 5th June 2015 says that section 47 is applicable to a private company subject to its articles of association. So 47 will be supreme, but for a private company, articles will prevail over section 47. So private company can say section 47 is not applicable to it. But that is because section 47 is made subject to the provision. So thanks to that notification. Okay, that's the point. Good. Save means accept. Save, in this case, the word save has the meaning accept. So now you read the sentence, except as otherwise expressly provided. Except as, save as otherwise. Save here doesn't mean, saving somebody from danger. In a way, it means accept. So in a way, we are pushing it and saving it and saying, save as otherwise. So accept. Instead of using the word save, suppose you want to use the word accept, E-X-C-E-P-T. Meaning will be the same. I think now it will be clearer. Except as otherwise expressly provided. Okay. Negative thought is repugnant for my brain. Okay, agreed. Got it. Chalo. Now moving on. Memorandum and articles together, when registered, will bind the company and the members. Okay. So it is as if every member has bound an agreement with every other member and the company. So company is bound to members, members are bound to company, and there is also a contract between members inter se. But members are not liable to each other, but they are bound together to obey the articles. See, no single member can say, I am great, because everybody is subject to the articles and memorandum. We have to obey the articles and memorandum. All monies payable by any member to the company under the memorandum and articles shall be a debt due from him to the company. Okay. Remember, the MOA and AOA create a contract between the company and its members and the members in the same. But a non-member, such as a director who is not a member, has no right to sue under the MOA and AOA. A non-member who is not a director who is not a member has no right to sue under MOA and AOA. This was tested by in many cases. For example, the articles of a company contained a clause that on the bankruptcy of a member, his shares should be sold to the other shareholders at a price fixed by the directors. So the articles of a company are there. B, a shareholder, was adjudicated bankrupt. His trustee in bankruptcy. See, when B became bankrupt, meaning insolvent. Bankrupt means insolvent. When a person becomes insolvent, what happens? The official receiver or assignee will be appointed. That is called trustee. See, in England, this case law is 1901. At that time, so they were called trustees. So a trustee in bankruptcy claimed that he was not bound by these provisions. No, the trustee was bound because B was the shareholder. You are only claiming under B. B was a shareholder and he was bound by the articles. Therefore, the trustee is bound. So this case shows that the articles and memorandum are clearly a contract which cannot be violated either by the member or by his legal representatives. People claiming under him, whether receiver or assignee or a trustee in bankruptcy or a legal heir, they are all bound by the articles because they are claiming through the member and the member is bound. So they are all bound. Now, this is another case. The articles of a company provided that Eli should be a solicitor for life to the company and should not be removed from office except for misconduct. Later on, he also became a member of the company. So the article said Eli should be the solicitor for life. Eli also became a member. But after employing him as a solicitor for a number of years, the company discontinued his services. Now, he being a member sued the company for breach of the articles, contract contained in the articles. Now, why have I put this photo? Don't ask me. Why this photograph is here in this slide? Don't ask me. Okay? I don't know. If anybody gets the point of that photograph, then you will know what is my mother tongue. That pun, see, this is a visual pun. Eli is the name of a person, yeah. Eli is a British name. Eli is the surname of a person. Okay. Eli is the name. It is a surname of somebody. John Eli, Jack Eli, some Eli. Okay. So Eli is the name of a person. That gentleman called Eli was to be a solicitor for life. Then they discontinued. Now see the point. He is suing as a member because he says, see, the articles say I cannot be removed. As a member, I am entitled. Can he sue? Okay, yeah. Eli. Okay. Okay. So his case was dismissed on the grounds that, see, Eli as a solicitor was not party to the articles. Please understand, the locus standi, the right to sue under the articles is only available to member. Now, Eli as a member is different from Eli as solicitor. His right as a solicitor has been violated, but his right as a member, no. So he cannot, there is no infringement of the right as a member. There should have been a contract independent of the articles, which says Eli will be a lifetime solicitor. Then Eli can sue. Articles may mention a number of things. They are binding only on the member. A non-member cannot sue. See, the confusion could be here that Eli is also a member. Correct. But his right as a member has not been violated. See, suppose he has not been served notice for general meeting. His right as a member is violated. He can file a suit. But he, as a solicitor, was removed. The article says he will be solicitor for life. But he gets no right under the articles to sue. He cannot sue. This is a famous case. Eli versus Positive Government Security Life. See, Eli is also a rat in my mother tongue. I don't know which language that is. In my mother tongue, Eli also means mouse or rat or whatever. So that's why to add a little fun. Okay, I have put that. Unfortunately, this animal is seen as a negative animal. Okay. Malayalam also rat is called Elia. Okay. Malayalam and Tamil are very closely linked with each other. In fact, the original Tamil is Malayalam. The pure Tamil, as originally spoken, in that entire belt, Lemuria and all, that Tamil is retained in Malayalam. Malayalam is the original Tamil. There's a theory. You can check it out. Malayalam, the words used in Malayalam are see, for example, my wife, she's from Palakkad. Sometimes they say Ormailla. Ormailla, memory. I don't remember Ormailla. So that is a very, very old, archaic Tamil word. Where we don't use it. In Tamil now we say Nyabhagamilla, which is a Sanskritized word. But Ormai is the original Tamil word, but which is still used in Malayalam. So very closely linked languages. Malayalam and Tamil, very close, too close, which is why sometimes in certain parts of Kerala, you will find the Malayalam spoken is similar to Tamil and the Tamil spoken is similar to Malayalam. For example, in Nagarcoil district, Thiruvananthapuram, the Malayalam will be almost like Tamil. In Palakkad, the Tamil will be almost like Malayalam. So, but whether my mother tongue is Malayalam or Tamil, I don't know. Chalo. So, Eli versus Positive Government Security Life Insurance Company. Okay, now we come to this doctrine of ultra vires. Since you are all authority on this doctrine, I'm not going to waste your time, except to confirm your knowledge. Ultra vires means beyond the powers. Ultra means beyond. Vires means powers. It's a Latin term. Ultra vires means beyond the powers. Opposite is intra vires, which means within the powers. Okay. When a company or its directors violate the provisions of this act or any other law, such an act is unlawful and attracts penal liability. It is ultra vires because they don't have power to violate the law. So such an illegal act, unlawful act, cannot be ratified even with the consent of all the members. But if it is something that the company could have done, if it is something that is permitted by the law and not prohibited by the memorandum, specifically allowed by the memorandum, then the directors can, if they exceeded their authority, but within the power of the company may ratify. Later on, when you come to Contract Act, you will see agency by ratification. That is, the agent has certain powers, principal has absolute power. Agent does something which is beyond his scope, but within the power of the principal, then principal can ratify. Same point, directors are agent, company is the principal. If the directors do something which is beyond their authority, but within the power of the company, the principal, then the company may ratify. But if the directors do something which is beyond the powers of the company itself, then the company cannot ratify. Not even all the members can ratify together. This is the doctrine of ultra vires. An act done which is beyond the powers of the company is void ab initio. Ab initio means from the beginning. Okay. The purpose of the doctrine is twofold, meaning two reasons. One, to protect the investors so that they may know for what purpose their money will be employed. See, look at to protect the creditors so that the funds to which they must look for repayment is not dissipated in unauthorized activities. Okay. Madhav Tiwari is again, when this slide will be uploaded on vires, I will now state my policy framework. After the session is over on that topic, 48 hours, maximum 48 hours, the slide will be uploaded. This is the policy I have given you. No negotiation. Policy. Preliminary is already uploaded. You can download it. So this class will be over, inshallah, on today is 4th, 6th. Once the fully, I will upload it. Maybe so the next day or within 48 hours it will be done. Because the next day I may not be able to do. I have told my secretary to do it. She may have some other work. She is not like me. She is always busy. So give 48 hours. She will do it. Okay. So it will be done. No negotiation. Note it in your diary. Srikanth's slide will be uploaded within 48 hours from the end of the session when the topic is covered. Okay. Inshallah. Got it, Tiwariji? See, when subject is going on, suddenly Tiwari is asking question like this. What to say? Can you do this in a regular class, Tiwari? Suppose I'm taking class in the hall. You will stand up and ask this question. Anyway. No problem. But your question is out of interest in knowing the subject. Therefore, I'm happy to answer you. So now this is a little bit confusing. The company wants to construct a cement factory. The company wants to construct a cement factory. The memorandum does not contain objects clause, does not contain manufacture of cement. It contains manufacture of sugar. But the company is proposing to construct a cement factory. So that is ultra vires the memorandum. Right. You are the owner of the land. Now you have agreed to sell. You have taken an advance. Now subsequently what happens? You register, you take them, maybe let us say that based on that agreement, you have registered one portion of the land. That's where the problem starts. Why you did it? Now, why you did it? Many times I ask my clients, when they come, why you did it? No, sir, I believe that gentleman. He said he will pay the money. In the meantime, he wanted to show to the bank for loan purpose. So I registered 15 acres, I registered. Then that fellow's, see how the complication starts. So this owner of, you are the owner, the company directors come to you and say, we have to borrow from the bank. They want some security. Just you, in addition to that, they'll say, we will also make you shareholder. All nonsense, confusion. And so you based on the agreement, you register. But you have not got the consideration. Now, they don't pay. Now you go to court. When you go to court, what the lawyer comes and says, hey, this company is not entitled to manufacture cement. It can only manufacture sugar. Whereas this land was purchased for the purpose of building a cement factory. Therefore, this act by the directors is ultra vires the I've received, I've registered. I can't do anything. Now, you might ask me, is this fair? Is this correct? After all, who is the sufferer? You have entered an agreement. Now, two things have to be understood. One, doctrine of constructive notice. Before entering into this agreement, what you should have done? Before entering into the agreement, you should have gone to the register and you should have verified the memorandum. Therein you would have seen cement is not there. Then you should have come back and said, look here, I cannot enter this agreement unless you amend your memorandum, objection come. Like that. Or you said, sorry, Baba, no. If you have not done that, in the court, can you say, I was not aware? You cannot. Kyun? Because doctrine of constructive notice. The court will simply say, Baba, doctrine of constructive notice, so you are presumed to have read it. Now you cannot say, I didn't read it. So we assume that you know and you can. So this is a very dangerous thing. But there should be some logic now. I will tell you the logic. This company, when it was incorporated, memorandum said sugar. When they went to the public for taking money, what did they say? We are going to construct sugar factory. So why did I give my money to him? Sugar factory. Why did the bank lend the money? Sugar factory. Now that bugger is saying he's going to do cement. No, my money should be safeguarded. So my money cannot be used for making these payments. So the rationale behind the contract doctrine is competency to enter into a contract. For an individual, competency is determined by age. For a company, it does not have a body to be heard, nor a soul to be damned. Therefore, it is defined by the objects stated in the memorandum. Memorandum states affirmatively what the company can do, states affirmatively and negatively what the company cannot do. Please note, earlier there was a question, if it is not mentioned, can I do? No. If it is not mentioned, you cannot do. If it is mentioned only, you can do. Okay? Now, so you cannot use the shareholders' funds, which they have given for one object, for some other object. Therefore, the doctrine says, any act which is beyond the scope of the memorandum of a company is void ab initio. It is a little harsh on third parties, which is why, Madhav Tiwari, what did you do 5 minutes ago? I don't know. Suddenly you are putting, sir, I did 5 minutes. What did you do 5 minutes ago? Super, yeah, Tiwari ji. I hope Ms. Shanbag will not get angry with me because I kept on repeating her definition. Arya, if you're still there, I'm very sorry. My idea was not to make fun of you. There are so many other funny definitions, but yours was the best. You win the cup today. Don't worry. Shanbag is a very beautiful name. I had a client called Shanbag. Even I still have a client, Mr. Gopal Shanbag and Mr. Vasantyam Shanbag. You come from the, what shall I say, Dakshin Karnataka, that Mangalore, that side, beyond that, right up to Goa. One of the most brilliant people in India, according to me, that community, coming from Goa, that side, Maharashtra, right down to Konkani, that entire Konkan belt. It's a beautiful place. I've traveled extensively in that part of the that part of the world. I've got a lot of friends, Shanbachs, Pies, and I don't know if they are all the same, but I think I have a lot of friends that side. Okay, very brilliant people. Okay, now, so this doctrine is, my guru himself in his book says, this doctrine is a dangerous thing for third parties because it's a trap for the unwary third party. That's what my guru uses the words. It is a trap for the unwary third party and a protection for the... But remember, see, in the case I described now, the company is not liable. And whatever money was paid on this agreement, the company is entitled to recover from the directors. Similarly, whatever contractual obligation is there, you cannot recover it from the company, but you can file a suit against the directors for cheating and for whatever damages. You can claim from them. But the directors will become personally liable. Directors, not members. Directors. Why? Because it is they. Whoever was responsible, they will become liable. Oh, you are from Sirsi, Uttar Karnataka. Very good, very good. That's what I said. That entire belt, right up to all the way up to Goa and Maharashtra. And beautiful place. Seashore. So happy. Sirsi. Good job. You know, so many times when I in those days, you know, they used to give the city name also in the along with your names and numbers and all. And every time I see a city, you know, by and large, I have visited by the grace of God, Mera Bharat Mahan. Visited most, but for small places, by and large, I have visited all over India. With on the map of India, recently I took up map and I have circled places where I have not gone. About 10 or 15 pockets are there where I have not gone. Inshallah, bucket list, I'm planning to go there also. Sirsi is in a place I have not come to. So maybe I will, next time I see the map, I'll say Sirsi. At least I'll pass through it and say, hi, I'm Sirsi. It's a nice word. And like that, Junjunu, I have not gone. Junjunu in Rajasthan, I have not gone. I would suddenly one student came from Junjunu. I have not gone. But just been to so many other places in Rajasthan, but Junjunu I have not gone. So like that. Patna I have not gone. As of now, Patna I have not gone. Bihar I have been to Gaya, I have been to other places, but not Patna. Like that. Love to be there, and I like to travel a lot. Not on business or mostly on, I go for temple visits and I go for what we call in Hinduism, we call it Kshetradanam. I go for visiting temples, Tirtha, Murti and Vriksha. And then I just go there and I come. So this is the point. Anyway, so now we have another 15 minutes. Let's see where we are going with this. We go to the another important doctrine. We saw the doctrine of constructive notice. We already saw it. But the constructive notice you have to understand endeavor management. See, what does constructive notice say? You are deemed to have knowledge. You cannot plead ignorance. Agreed. But what I can have knowledge, only what is stated in the memorandum. For example, the Articles of Association says, Board of Directors can borrow up to 1 crore. Beyond that, special resolution should be passed. I have seen it. I have seen the articles. I have seen it. When you came to me and you wanted to borrow 3 crores, I showed you the clause and I said, look here, Baba, this is going beyond 1 crore. Your balance sheet already you are having 2 crore. Now you want another 3 crore. 100% I cannot lend unless you show me a special resolution approving this borrowing. Agreed. Now those fellows go back. Then 3 days later they come with a paper saying, sir, see, you have passed a special resolution. 3 days later, maybe not. 1 month later they come. And you go to the ROC also and see, check it up. It is I go there. Yeah. It has been MGT 14 or some nonsense. The company said it has uploaded it. Yeah, I got it. Now I lend money. Now you understand one thing. Have I read the articles? Yes. Have I ensured that the articles are complied with? Yes. That's it. Now, suppose tomorrow some other people come and say, you know, that resolution was never passed. Those directors are friend. Look here. I cannot go into all that nonsense because if I do that, I will go indoor. That is why it's called doctrine of indoor management. Meaning, I can ask you as the directors, pass the special resolution. You give me a paper, I believe it. Beyond that paper, I cannot go. Because if I go beyond that, I will enter your door into your boardroom. I don't know what happened. I don't know what happened in your general meeting. I'm a third party. So, Doctrine of constructive notice is a doctrine of presumption in favor of the company against the third party. It's a rule of presumption that the third party has read all the documents and he has understood. But doctrine of indoor management is a rule of presumption, which is protecting the third party. See, there are many things. A transaction may have two aspects: substantive, what has to be done, or what has to be done, and procedural, how it is to be done. Now, what has to be done? Special resolution has to be passed beyond 1 crore borrowing. I know. Procedural, passing a special resolution. I don't know whether it was done or not, because an outsider may be presumed to have knowledge of both the substantive and procedural aspects. But how can he find out whether a procedure has been actually complied with? He cannot. Therefore, he can presume in his own favor that things which ought to have been done regularly have been done regularly. This is known as doctrine of indoor management. This is a protection for the third party against the company, especially the directors. The third party who has read, understood substantive, procedural, proof has been given to him. That's all. Beyond that, he need not go. This doctrine is called Doctrine of Indoor Management. It is also known as Turkan's Rule. Turkan's Rule. Turkan's Rule, why it's called? Because it was decided in the case of Royal British Bank versus Turkan. Royal British Bank versus Turkan. Turkan is the name of a person, okay, like Eli. So now that's why this is also known as Turkan's Rule. In this case, the company had powers to borrow money, provided a proper resolution was passed. The company borrowed money and issued bonds. The resolution was not in fact passed. Maybe they gave a resolution, paper, saying it was passed, but it was not in fact passed. It was held that the company was bound. The resolution was not passed, did not affect the bank. Because the bank, see, that is why most banks, what they will do, they will ask you to give certified true copy of the special resolution. They will also ask the company secretary to verify and give them a report whether that MDT 14 has been uploaded. If it has been correctly uploaded, that's it. They are happy, they will keep it in the file. Finish. Even as an auditor of the bank, even I cannot go beyond that. Okay, have you seen the article? Yes, sir, here's the resolution. Yes, sir. That's all. Even as an auditor, I'll have to clear that loan. Yeah. The company cannot escape the liability. The bank was bound to inspect the articles. Beyond that, they were neither bound nor entitled to look. Means, of course, after having looked at the article, you should collect documentation that there has been compliance with the articles. That's all. If that is forged or not done at all, I'm not worried. Because it would take them indoor, behind the closed doors of the company's boardroom or general meeting. Okay. Now, there are 4 major exceptions to this doctrine. 4 major exceptions. 1, persons having actual knowledge of the irregularity. Meaning, suppose in this Turkan's case, the bank is a third party. Suppose that money is being lent by a director or by a person who is aware that the resolution was not passed. Then the person whose actual knowledge of irregularity cannot say, I am protected. Okay. He knows very well that it is irregular. So he cannot claim. This is meant to protect the company from collusive fraud, where without complying with the procedure, they will give and then pay the money. So there they say no. Where you have done something which is irregular and you are the borrower, the lender is also aware, the seller is also aware that there is irregularity, then it cannot be. Persons purporting to act as directors. See, you have sat in that boardroom and you have taken a decision, which is wrong. Now you cannot claim indoor management again. Forgery. See, what happened in one case, the managing director of the company, the company secretary forged the signature of the MD and he cashed the checks. Okay, then the company became insolvent and the liquidator said, I am not bound. But I'm sorry, the bank said, I'm not bound. But the liquidator said, no, because it's a forgery. You are a bank. before passing that check, should you not have verified the signature? A forgery is a nullity in law. Indoor management cannot protect a forgery. When there is a forgery, it is the bank's duty to verify the signature. If the bank has not done that and passed the check, it is liable to compensate and it has to pay. This was a decision in Reuben versus Great Fingal Mining Company. Okay? It's not necessarily the case law, I'm just saying. Forgery. Persons put on inquiry. This is another case. Underwood versus Bank of Liverpool Limited, where the bank, see the MD, what he was doing now, there is a check in the name of the company. The MD was endorsing it in his favor and depositing in his account. Every check in the name of the company was being put in the MD's account. The bank was also allowing it. And see, he is supposed to deposit in the company account. Now. Instead, what he's doing, he's endorsing it. It's later on when you come to negotiable instrument, we will talk about it. Basically, it's an uncrossed check in the name of the company. He is endorsing it and putting it in his account. As the MD is endorsing for so-and-so limited, MD is signing and putting his name and endorsing and depositing it. Now, this is not normally done. Now. Company ka check, every time this fellow deposits in the bank. The bank is put on inquiry. The person who has to make reasonable inquiry does not make that inquiry. Indoor management will not protect them. So these are 4 very famous exceptions to the doctrine of indoor management, right? So now we are going to go into the topic of alteration of memorandum and articles. We have another 5 minutes. I will cover a few points. Then the bulk of it we will start in the next class. And basically, alter is defined. Means alter or alteration means making of additions, omissions, substitution. So you may add one new article or in the articles. You can't add one new clause in the memorandum. Sirf art or ya che. You can't go beyond that. Okay? You can't go beyond that. But you can alter, you can omit something or substitute something. For the existing clause, you can substitute. You can take the capital clause. Current capital, 1 crore. You can substitute 1 crore with the words 5 crore. Substitution, like that. So, alteration of memorandum. Company may alter the provisions of its memorandum with the approval of the members by a special resolution. Alteration of articles. Subject to the provisions of this Act and the conditions contained in its memorandum, any company may by a special resolution alter its articles. So, basically, first step, if you want to alter memorandum, if you want to add a clause, or you can't add, if you want to change a clause or substitute a clause, you can't omit also. Memorandum, sacred, you can't touch. You can't omit, add, but you can substitute. You can make changes with it. Articles, you can even amend an article by omitting it or substituting it. You can remove the existing article and substitute it with the new article. Okay, which is what I normally do. Whenever I amend articles, I will entirely take the old article out and put a new article. So I will say resolve that subject to the provisions of Section 13, Section 14 and other applicable provisions of the Companies Act, the existing article number 12 be substituted by the following. Then again I will type out article 12 as I want it now. Then pass a special resolution. Then print the articles again. File it with the ROC. This is the procedure. In simple terms, but not so easy. Because alteration of memorandum means what? Every clause is there now. Alteration of name clause, alteration of situation clause, alteration of object clause, alteration of capital clause. These 4 clauses can be altered. Liability clause cannot be altered. Because you can alter it. You can make a limited liability company into an unlimited company. But rare. Association clause cannot be altered. So to my knowledge, liability and association, you cannot alter. Okay? Cannot alter. But the other 4 can be altered. Now, in addition to the special resolution, in addition to passing special resolution, you should also comply with certain other procedures for alteration of clauses. We will be seeing that in the next class when I will take up those various topics. I don't want to go in because I have only another 3 minutes and we have made good time. We have made good time. we can easily cover the balance topics, inshallah. And if I will also hope, see, I have already uploaded one assignment. About 5 questions are there, simple questions. Try to go through it and keep your answers ready. I will be uploading another set of assignment tomorrow. Together, both of them, we will discuss by the grace of God on 6th. When at the end of the session, when I have covered the whole topic, I will take it up. I will take up that. Preliminary also, I will upload an assignment. We will take up all those questions at the end of next class. Okay. If you have any specific queries arising from today's class, let us have. Private company to public company alteration will be coming in name. When there is a change in the name, and you can do that. Also will be see, private company to public company is basically change in the name by the removal or addition or removal of the name, limited or private limited as the case may be, and alteration of articles. For a private company, you have to include the matters. Public company means you have to remove those matters. So basically, you have to do all this and get approval from the. Got it? We'll talk about that also, definitely. In the next session, we'll talk. Any other queries if you have, definitely I would love to take it up. Thank you very much for your wonderful support and extraordinary questions and sharing, etc. Looking forward to a great session on 6th with your support, and wishing you all a great evening ahead. Bye. Good night.